Good morning, everyone, and welcome to InvestorExpos show for February 6. My name is Anna, and I'll be your host today. This session will be recorded and sent to your email. Today we have a great lineup of 4 speakers for you: Andrew Keene, Larry Gaines, Matthew Moccoro, and Matt Choi.
All right, how's everybody doing today? I feel a little bit faster on today's presentation. Usually I do this in about an hour, but I only have about 45 minutes today. So today I'm going to show you something, and I call them Wall Street's secret trades. This is how I've made over $4 million trading simple stock options. I call them stealth trades because few people know they exist. Even fewer know how to find them. But these stealth trades generate billions of dollars in profits. First, I'm going to show you how you can put them on and how you're going to predict which way is the stock going to move. Before we do, you have to get into the risk disclaimer. Basically, I'm not a registered investment advisor. I cannot give recommendations or advice. Everything I do is my opinion. I don't trade any outside capital. The capital I trade, I only trade on my own capital. Let's look at what a signal looks like. This is a stealth trade confirmation for Hain Celestial from June. To me, probably most of you, this doesn't mean a damn thing. Might as well be written in Latin. But to a trade professional, it reveals an unusual stealth trade activity. In this case, a massive long position in Hain stock. Today, I'm going to show you how to use this very code to make 321% in just 17 days, turning every $10,000 into $42,100. One trade, 2 weeks, $32,000 in profit. Imagine finding a quick trade like this just once a month. That would add up to $385,000 in pure profits. And you can find these opportunities every single day. I've been a professional trader since 2003. When I talk, people listen. Make regular appearances on CNBC, BNN, and a bunch of other networks. I've also co-hosted the show on Bloomberg and Fox Business. I'm the president and founder of Alpha Shark Trading. I've also written 4 books, How to Trade Like a Hedge Fund Manager and The New Wave of Trading. I'm really excited to have you on. I can't wait to share it. But before we do, there's some quick house cleaning. First, there's a chat box at the bottom of your screen where you can type in your questions and comments. But if you can do me a favor, try to hold everything until the end of the presentation. I'm going to stay around for a live Q&A. Make sure all your questions are answered. I'd also suggest shutting down Facebook, Skype, YouTube, or anything else that can slow you down your internet browser and cause problems viewing this. This session is not recorded on my end, so if you miss something, you won't be able to go back. I know your time is valuable, and I don't believe in wasting it. So let's jump in with the example we just showed. Now, this code looks complex, but it's actually pretty straightforward. What this shows is a huge option trade in Hain Celestial stock, a stealth trade. It's easier to see on the chart, so let's bring it up. See where the stealth trade took place. This chart shows a large amount of money going into Hain, completely out of nowhere. Let's overlay that with price action. The black chart represents the stealth trade activity. The blue shows the option change in price. As we can see, after the stealth trade was placed, this price shot up. In this case, the option shot up 321% in 17 days. But this is an important part. It jumped after the stealth trade took place. This gives you plenty of time to put the trade on in your account and maximize your potential profits. Following this stealth trade in Hain would give you a chance to capture 321% in 17 days, turning every $1,000 into $4,200. And it's so easy to do. All you have to do is find and decode these stealth trades. Here's another example. I spotted in GameStop. You can see where it spiked on the chart. If you knew about this, you could have taken a very simple option trade in GME, then walked away with 360% profit in just 13 days. And look, this isn't hindsight. This isn't woulda, coulda, shoulda. This was an actual alert I sent to my subscribers. In at 50 cents, out at $2.30, turning every $5,000 into $23,000 in about 2 weeks. Not bad, right? Here's another one in Citigroup. There's a stealth trade from mid-February, and in less than a month, subscribers were able to capture an easy 495% gain just from following the stealth activity. Guys, I've been trading this strategy for over 16 years. I have tested, tried, retested every aspect of it. Throughout the process, I've discovered 3 key signals that led to the biggest move. The ones that can hand you 300%, 500%, even 1400% gains in as little as 2 days. Today, I'm going to show you what these signals are, how I use them, and why I believe this is the only way to make money as a trader. But first off, let me tell you who I am and why you're listening. Again, my name is Andrew Keene, and I'm a professional trader. I earned a finance degree from the University of Illinois, and after graduation, I went on a lot of job interviews. Everybody from financial analyst to investment banker. One firm was even offering me a huge salary. Now, I was a 21-year-old kid fresh out of college. This was a big opportunity. But I decided to go on one last interview. It was with a trading firm. And after a few minutes, I knew this is exactly what I wanted. Everything was about probability math, and it just made so much sense to me. So I took an entry-level position as a clerk. I was making $2,000 a month and taking the 5:42 a.m. train every morning from Union Station to Chicago. My mom wasn't excited about my decision, and you can see why. But I was passionate about trading, and I loved the markets. After 9 months of long hours and low pay as a clerk, I finally got the opportunity to trade. That's me in the pits back in 2003. The first year, I made a good amount of money. The next year, I did better. Year 3, same thing. I felt like everything had finally fallen into place. Eventually, I was making so much money that I got cocky. I thought I couldn't lose. Then one day, the inevitable happened. I lost over $494,000 on a trade in AMAG and blew out my trading account. Now, I don't know how many of you have lost over $500,000 in one trade, but let me tell you, it stings a little, okay? More than that, it was embarrassing. My coworkers, my friends, my family, they thought I was this big hotshot successful trader, and now with one stupid trade, I had lost everything. So I did the only sensible thing to do in that situation. I ran away from my problems. Okay, probably wasn't the most mature decision, but that's what I did. I literally moved to a Buddhist monastery and started teaching English. While I was there, I licked my wounds, made peace with my losses, and said I was going to never let this happen again. So I came home with the last $100,000 to my name and went back to the trading floor. I remember there's this Merrill Lynch broker, Hess, H-E-S. One day, this guy comes in the pit and sells 10,000 Apple credit put spreads. We had no idea who was on the other side of the trade, but he was betting a lot of money that Apple stock would go up. Sure enough, it did. Next week, the same thing happened. Right after the broker got long, the stock shot up. This continued to happen week after week after week. I said, wow, this guy's pretty smart. Every time he gets long Apple, the stock goes up. So for almost 2 years, I followed his trades. When he bought, I bought. When he sold, I sold. That's it. That's all I was doing. No technical analysis, no chart reading, nothing. And I made close to $1 million in Apple 2 straight years just from piggybacking this one trader. And in less than 2 years, I turned my last $100,000 into $5 million. The strategy I use in the trading pits is the exact same one I use today. Only difference is you can do it from anywhere. You don't need a seat on the exchange floor or a 7-figure account to see what big money is doing. All you need is a laptop and an internet connection. Everything is electronic. We have instant access to order flow. I use an advanced piece of software that shows electronically institutional order flow. The same trades I followed in the pits to make almost $5 million. But now it takes less than an hour a day. And it's a hell of a lot easier than watching those hand signals from across the trading floor. Let me show you another example in DIX. This was a stealth trade in DIX 40 Good last March. You can see the spike in activity where a trader bought 2,450 call options one morning. 99% of investors did not see this happening. They had no idea. But with the special scanning software like I use, you could have seen this opportunity earlier and made 433% profit in just 3 days. A small $1,000 position would have turned into $5,330 in less than a week. Again, just from following these under the radar stealth trades. It couldn't have been any easier. Let's look at a chart of Papa John's. At this time, the stock was down more than 50% in 3 months. There's no indicator on the planet that would have told you to buy there unless you were watching the stealth trades. You could have bought calls in Papa John's when the stock was trading at its low, when the options were dirt cheap. The stock began to climb the next day. Traders could have made an easy 600% profit in 18 days. But here's the best type of this trading. The reason I've been using it for 16 years. It works in a bull and bearish market. Here's a short trade you could have taken in Citigroup. After worse than expected earnings, the stocks fell from 81 to 71. But right before that happened, Stealth Trade revealed a massive bearish position. When a top trader bought 4,502 out of the money, March 74.5 puts. Sorry. Most traders never saw this happening. There's the spike you can see on the chart. As you know, put options go up when the underlying stock goes down. And as expected, that's exactly what happened. Anybody could have followed this trade and backed 505% gains over the next 2 weeks. It was the same with US Steel. Right after the stock made new highs, a stealth trade warned it was about to reverse. To profit from this, all you had to do was follow along and buy the same put option. Then watch again 750% over the next 8 days. These 4 trades could have handed you 2,228%, enough to turn $1,000 into $23,000, $5,000 into $115,000, $10,000 into an incredible $230,000, all from following the smart money and piggybacking these simple stealth trades. Hopefully you're seeing the power of this strategy and why I believe this is the only way for retail traders to make money. In a few minutes, I'm going to show you a stealth trade I spotted this morning. I'll give you the details so you can put it on right now. But first off, I need to tell you more about the stealth market and how it predicts which direction the stock is going to go with such accuracy. Most retail traders buy 5 or 10 contracts at a time. 20 would be a big trade. So if someone's buying 5 or 10,000 contracts at a time, there's an odds he's an institutional trader at a big shop like Merrill or Goldman. These would be multi-million-dollar leverage bets, enough to wipe out any retail trader. If someone is trading this kind of size, odds are they're working for a big investment firm like Merrill or Morgan. They would have access to information that we do not have. They'd be trading with firm capital. They would have a long track record of making money. They have instant access to information like buyout rumors, earnings leaks, and large hedge fund trades. They would have non-public information. By monitoring this, the financial world knows the power of these abnormal stealth trades. Articles have been published at Wall Street Journal, Fidelity Investments, Zacks, MarketWatch, and TheStreet.com. I've even seen one of my trades featured on CNBC. Here's the one we saw on FireEye last year. After my software flagged a stealth trade for 5,030 contracts, I followed suit and bought the September 15 calls. Later that day, Pete and Jerry talked about them on the air, but by that time it was too late. Stock had already moved, and I made $7,000 on this trade in less than 3 hours. This one is no different than the others. By scanning my institutional order flow, my software flagged the stealth trade the moment it filled, causing the big spike you can see on the chart. Then, over the next several hours, the price rose, allowing me to pocket a quick $7,000. I did the same thing to make $3,000 in electronic arts in one day, $3,700 in Alcoa, $3,984 in McDonald's, $5,956 in MT. Last year, I made over $31,000 on one trade in CNQ and over $14,400 on GameStop this year. And you're probably thinking to yourself, well, he's probably trading $1 million comp. I could never make these trades. You're completely wrong. You can see my account balance right there, $38,185. Anybody can do this, even small account traders. This is a $25,000 cash account I opened to show my subscribers what I could do with this simple strategy. I was able to make $11,663 in profits in 6 weeks just from following the stealth trades. Now, don't get me wrong, not every trade is going to be a winner. Every once in a while, a trade just isn't going to work out. This is trading after all. But with this strategy, your winners will far outweigh your losers. And that's what I want. The stealth trades I follow are designed to actually make money. They're carefully crafted to get Wall Street firms in early before the big moves happen in the underlying stock. It works like this. An institutional trader places a large trade betting a stock will go higher. Then Wall Street tricks come into play. The brokers will push that stock to clients. Mutual funds will take positions. Market makers will bid up the shares of stock. Analysts issue upgrades. They release positive stories to financial media. In other words, the Wall Street machine goes to work. How do you think it's possible that Goldman Sachs made money 236 of 252 trading days? And that's the real beauty of the strategy, because now you can take advantage of it on your own. All you have to do is get in when the stealth trade takes place, then sit back and watch the market go higher. The evidence is overwhelming. A leading financial firm that concluded that these stealth trades have a profound impact on stock price. Buying can send the stock up. Selling can send it lower. NASDAQ.com reported that, quote unquote, very few things can move a stock like stealth trades. And research at IBD found that stealth trades are, quote unquote, what reveals what fund managers and other large investors are doing at critical moments. Stealth trades have been proven to be perhaps the #1 predictor for stocks about to make big moves. Moves that give traders the ability to make quick returns in the option market, even if they have a small count. This is how many subscribers were able to make $3,150 on Target calls, $4,020 in 4 days at McDonald's, and $1,980 in 1 day in USB. Now, at the beginning of the webinar, I promised to show you 3 tricks I used to make almost $5 million trading. The first, which we talk about, is stealth trades, which alone can make you a lot of money. But as a trader, I always want to find ways to be more accurate, more profitable. So I did a study. I analyzed my trading history over the last 16 years. The entire time I've been using the stealth trades. And what I found with certain conditions led to an even higher win rate. These same conditions led to my biggest gains, trades where I was able to make 10 or 20 times my capital in a short period of time. After I've identified strong stealth trades, the next thing I look at is price. Statistically, cheaper options are best. Those priced between 20 and 80 cents or $20 to $80 per one lot will give you the best bang for your buck. They are cheap because they are out of the money options, which means if the stock does move even a little bit, these options will pay off. So let's look at an example here. This is Walmart from earlier last year. Stock went from 93 to 100. One of the most boring stocks there are, about a 7% move. Nothing too exciting. During that time, the in the money 90 call went from $7.25 to $14, a 93% gain. But the cheaper out of the money 105 call went from 50 cents to $2.45, a gain of 390%. Same underlying stock, same time period. But the lower cost option made 4 times the return. Here's why it's important. Imagine you're investing $3,000 in this trade. At $725 a piece, you could have bought 4 of the 90 calls, turning your initial $3,000 into $5,700. Sounds pretty good. Or you could have bought 60 of the out of the money 105 calls, turning the same $3,000 into $14,700. Easy choice, right? And this is huge for small account traders. If you only have a couple $1,000s in your account, a $725 call is going to eat up a lot of capital. But with the $50 option, you're only risking a small piece of your account. So does this make sense to everybody? That is criteria 2. I want cheap options, preferably for price between 20 and 80 cents. The third thing I look at is delta. Delta is a measure of how much an option moves with the underlying stock. Higher delta options move more. Lower delta options move less. Obviously, we want to trade instruments with big moves. But if the delta is too high, the option is going to be too expensive. It won't meet our criteria field. In other words, we want a low delta. That's where you get the best results. I'm looking at something between 15 and 45. So that's the magic formula. Stealth trade activity, option price, and delta. So here's how I use it as a trader. Every morning I scan 4,199 stocks for stealth activity. This finds me 10 to 12 good trades every day. Then I filter that down to 10 to 12 of the best trades I'm looking for. After looking at the charts, analyzing the news, I look for the ones that meet all my criteria. Fine-tuning the stealth trades helps me find winners that I send as subscribers, like 300% in Moccoro, 400% in C&Q, but also big winners like 800% in Alibaba and 1400% in Google. These are the kind of trades that can make a huge impact on your trading and quickly grow your account. Look, I know the struggles of being a trader. I know what it's like seeing a stock take off, not wanting to miss the move, then getting in right before it goes the other direction and you get stopped out. You get in the trade, you get stopped out, then watch the whole thing take off again, especially if you're small at trading a smaller account and looking for those first few wins to build up your equity. It's frustrating as hell. I work with thousands and thousands of traders every day. Some have spent tens of thousands, if not hundreds of thousands of dollars on courses, chat rooms, and just still can't be profitable. The problem is they wasted their time and money listening to wannabe trading gurus who like to give useless generic advice. Things like let your winners run, cut your losers short, trade with the trend. Give me a break. It's BS. 99% of these traders have never traded for a living, and I guarantee you they won't open their account and show you their P&L. The truth is, all the money management in the world won't make you profitable. It just won't. No magic indicator, no gimmickly slogan is going to make you successful. What traders need is clear, concise trades that actually make you money. Period. This is the only thing I've seen traders get over the hump and start being profitable. I got this the other day. That trade cost me $850, and he quickly got out for $2,200. Lance made $1,600 in GME. Dave more than doubled his trading account over the weekend. Gerald sent me this, not long after joining. These people are no different than you. They're not smarter or luckier or more experienced. They're just getting their ideas from a better source. Wall Street's top institutional traders. And it's like fishing from a stock pot. There is nothing stopping you from doing the same and achieving the same success. And I want to help you do the same. I've been working on a project to alert folks of these opportunities. I call it am I out of place here? Oh, never mind. I call it the live trading room, and I'm guaranteeing all new members a 500% return on investment. Members will get new trades every single day. These will be low-cost trades that anybody can take, even if you want to make $20 to $100 per trade. The goal is to find tomorrow's winners today before they start moving. Trades like this in Macy's. After seeing a stealth trade for 2,650 contracts, I alerted a trade to buy the April 5th, 25.5 calls for 16 cents. Subscribers were over triple their money in less than a week. Same thing with Regions Bank and XLF. And if you miss a trade, don't worry. That's the nice thing about getting a new trade almost every single day. Even if you're on vacation, when we recommended Macy's and Regions Financials, the next week you could have picked up 300% in XLF or 402% in Western Dig. I've been beta testing this service to a small group of traders, and the results have been outstanding. Steven quadrupled his money in 2 days on a stealth trade in AMD. David took one of my trades right before the market closed on Friday. He closed it on Monday for 250% gains. David did even better. He got him at Steven did even better. We got him at $351, out at $19. Think about that for a second. He got into the TTD August 105 calls for $3.51 or $351 per contract. He sold them for $1,900. Even if he bought 5, that's a profit of $7,745 in just a couple of days. When you join the live trading room, you're going to get a 12-month membership. And since I'll be giving you about 2 trades a day, you're going to have over 500 opportunities to score big ones. Another thing about having a full year membership is you're going to see gains compound one after another. Let's look at 3 examples I gave you earlier. Assuming they fell one after another. Starting with $1,000, you're going to grow that to $8,750 with puts in U.S. Steel. Rolling that money into the Google trade, you're going to turn that into $131,250. And finally, you're going to invest in the 2-day trade in Alibaba and balloon that to $1,181,250. 1,000 to 1.1 million. That's more than 1,100 times your initial investment. Now look, this is obviously a hypothetical example. There is risk anytime you put any money in the market, but even a fraction of this would be life-changing for most people. The bigger point I'm trying to make here is getting in early alongside Wall Street's top traders is the easiest way to make big, consistent profits. This is how much I believe in the service, and I want to do everything possible to make sure that you succeed. So I'm holding live VIP mentoring. So this is what we're offering today. For the first time ever, we're offering a monthly subscription. You will get all the bonuses. 12 months of the biggest trading room in the world. Okay, I have partnered with a company on the East Coast. We have over 2,000 paid subscribers into the trading room, and almost 1,000 people show up every single day to watch me trade. Once a month, VIP group mentoring, unlimited email. So these are going to be added bonuses. Once a month, VIP group mentoring, unlimited email support. If your question is about a specific trade or stock, I usually answer them directly. New members are also going to get my master course. This covers everything I've done in my professional trading career. 16 years is condensed in 8 hours. In addition, every week you'll get my personal watch list. And you're going to get 1 year of my earnings trade alert. This is a 500% ROI guarantee. So the ROI guarantee, what you pay for the service today, we keep track of an account and I'll show you the results. If the account does not 5x in the next year or make 500% return, I'll give you year 2 100% free. I don't know anybody that's willing to give you this kind of guarantee. So you're going to pay for the service today. If the portfolio, which we track, does not go up 5 times what you pay, we're going to give you year 2 100% for free. I'm going to show you it. So this is everything you get, guys. You get 12 months of the biggest trading room in the world, unlimited email support, once a month, VIP, group mentoring, Stealth Master Course, personal watch list, 1-year membership of earnings, plus the 500% ROI guarantee. The total value is $16,475. We're going to offer it to you today for $2,495. But since it's a webinar, we're going to give you an extra $1,000 back. Okay? Instant rebate. alphashark.com/2020. Or if you want to sign up monthly, we have a couple spots. We only have 25 spots available. Okay? The next 15 minutes, I'm going to answer questions. I'm going to show you the portfolio, and I'm going to show you the testimonials. Is when you guys see that, you'll be like, oh my God, AK is the real deal. I need to get in immediately. Okay? alphashark.com/2020 or alphashark.com/2020A. And I'm going through my email. Congratulations, new member Josh. Congratulations, new member Sharon. Congratulations, new member Jay. Congratulations, new member Jack. Okay? So let me show you the portfolio that we've been tracking. We have a question here. How do you know if it's an opening or closing position? It's a very, very good question. So all we care about is what the initiator is doing. So there's always going to be two sides of a trade, right? There's a buyer and there's a seller. But all we care about is what the buyer is doing, and he is the initiator. So that's all we care about is what the buyer is doing. So let me go in here, guys, and show you the portfolio. So this is the portfolio since November. Any questions you guys have, I'm here to answer questions. If not, I'm going to spend the next 15 minutes going over the portfolio. Congratulations, new member, Steve. We only have 25 spots available, guys. So you must take advantage of this now. So this is the portfolio. We started tracking this on November 25th. Since November 25th, there's been 58 trades. Okay, so about 10 weeks. 38 winners, 16 losers. So let's do 38 divided by 54. 70% win rate, guys. Okay, this is every trade since November 25th. So there's been 58 trades in about 10 weeks. So you get about 6 per week. Any questions you have, guys, you can sign up monthly. If you sign up monthly, you'll get the bonuses. alphashark.com/2020. I'm looking at my index. New member Stephanie, congratulations. Congratulations, new member Christopher. We only have 25 spots available, guys. Then what I want to show you are the testimonials. These have been unbelievable. So these are people that can this be added onto our current price? Sure. I mean, we'll look at your account. Yeah, so if you're currently a member of my trading room, if you want to just take the monthly, you can just buy it right now, and then we'll cancel your other one. So look at this, guys. This is crazy. So this is since people joined the trading room, this is people just like you that have never heard of me, never seen me trade before since November. We didn't pay for any of these people to write these in. I made $38,000 in 3 weeks. This guy said I'm up 31 trades, $2,960. Bob is up $26,000. None of these people have ever heard of me, see my trading style or strategy before. And this is where you're going to get in, guys. You can take the 1-year membership for $14.97. You know, if you get your master's, your MBA, it's $85,000. You get your undergrad, $58,000. You're getting your 1-year master's with me as your personal coach, guide, and professor. Asher, here's Bob again, $23,000. My name is Ben. I made $1,000 in Asher, aka you're the best. I made $1,100 in Asher. Look at all this money made in Asher. Here, $750 in Mosaic. I've been averaging $1,325 per month. Okay. 5-minute bar, Michelle, $3,000. Michelle, another $5,000. I have 7 pages of testimonials, guys, of people making money on my system in just the last 2 months. Are your trades emailed or texted? Great question. So the room is open an hour a day, 4 days a week. So opening bell from 9:30 to 10:30 every day. That's Eastern, 4 days a week. We send all trades via text and email as well. Wow. I briefly mentioned AMT this morning. 60 cents to $1.30. It is 1 hour a day, yes. I don't trade for more than an hour a day. I trade for 4 days a week, 4 hours a day. And this is my account, guys. I'll show you my account so far year to date. So here's my account. And you can see here, $2,800 profit. I took a $5,000 cash account and I've turned it into $13,000 in just 10 weeks. 5,000 to 13,000, guys, trading my system. I do trade on a simulated account right now due to the fact that I want everybody else to make money. I really don't care about making money anymore. Look at Richard Kleiner, guys. These people are no different than anybody here. Okay, no different. Look at my inbox. These are all testimonials. Let's see this one. HIQ just hit profit target, more money in the bag. These come all day long, literally. Weekly update. Bob, he's up $51,000. 154 trades, 113 winners, 41 losers. Congratulations, new member, Joseph. Congratulations, new member. You guys, we only have 25 spots. You can sign up for the yearly if you want, or you can sign up for monthly. You can choose which one you want. You'll get all the bonuses. Okay. Let me go back in here. Here's Charles, $1,500 CIN. Jason, $950 CIN. Kevin, $1,500 CIN. Here, Lori, $950 in Activision. Charles, $5K. Bob, $3,100 EA. I got another one for, let's see who this is. Charles is in for the year. Great, Charles. Charles is in for the year. Diane, $1,700 year to date, effortlessly. 7 pages testimonial. So if you want to sign up monthly, it's alphashark.com/2020A. 2020A to sign up monthly. If you want to sign up yearly, it's just 2020. So 2020A will get you $199 a month. No obligation. You can cancel anytime. Okay. So this is the 5,000% ROI guarantee. Let me show you this, guys. And this is the coolest thing. And I've already hit my goal. So let me show you this. These are the stealth trades. So we've been tracking the stealth trades since. So we've been tracking the stealth trades since October 17th. Okay, since October 17th, we've been tracking the stealth trades. Fast forward to February 5th. $5,000 cash account is up $8,382 of profit. $5,000 cash account is up $8,382 in profit. You know what that means, guys? That means that you're going to pay $1,500 for the program for the next year. Okay? If I do not generate a $7,500 profit, okay, that's 500% of what you pay for the program, I'll give you year 2 for free. Can't pay for losses, not a registered investment advisor, can't give recommendations. This is every trade, winners and losers, guys. We don't take out the losers and just say this is a winning trade, this is a winning trade. I mean, there's a lot of losers in here, but we're at about 70% win rate. Loser, 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 loser. Okay. If you look here, our last 7 trades have been winners. Okay. So this account, if you took a $5,000 cash account, you'd be up to $13,000. Okay. Let me go through the program one more time, and I'm going to answer any questions you have, guys. Every single person, unless you're a current member, should be signing up. If you're not signing up, let me know why. What rebuttal do you have? If you do not have an hour a day, 4 days a week to commit to your trading, you shouldn't be trading. That's it. If you're on the East Coast, on the West Coast, 6:30 to 7:30. I have like these really young kids. I call them kids because I'm 40. They want to come to my house every day to trade for an hour. They're like, if I can make $50 or $100 before my day of work starts, why would I not? Like literally, I have people making tens of thousands of dollars, hundreds of thousands of dollars trading this program. Okay. So here is everything, guys. 12 months. If you don't do options, we do have some people. So I'll give you the buy price and targets. The buy price and targets. Can you try for a month? Yes. So I will allow that. We're going to sell out, but I will allow that. So if you want to buy for a month, and then after the month, I'm a really reasonable, flexible guy. So if you want to try it for a month and then move, so you'll pay $199 right now, and then we can move you to $14.95 after the 1 month. Okay. So this is everything you get, guys. I got about 4 minutes left. You're going to get 12 months of the live trading room. Yeah, if you want to sign up for a month, I almost guarantee if you sign up for a month, you want to upgrade to the year. Just because like the trading room has blown up. Like I used to run this room for 4.5 hours a day. We used to have 50 people in it. We have 2,000 paid subscribers in it. A smaller account, can you grow this? Yes. I mean, some people on my marketing team, they 7x their account. They took a $20 account to 140. This girl on my marketing team. Okay. So what you get is 12 months of the live trading room, $4,995 value, unlimited email support, once a month, group mentoring, master course, personal watch of the week list, earnings alert, and the 500% ROI guarantee. So you're going to pay $1,497 for a year, guys. You don't have to pay again for a whole year. You can sign up at www.alphashark.com/2020. Or if you want to do the monthly, it's 2020.a. So if you want, and if $2,000 is too much, I'll give you all the bonuses. So we'll just change this to 1 month, okay? So you can get 1 month, guys, if you just want to try 1 month. And here you go. So you can get 1 month. That'd be a $499. So here you go. Thank you guys so much. I try to keep this short. I went really, really fast today due to the fact that I usually do this in much longer time period. Usually I get an hour and I go a little bit slower. All right, that's it for me, guys. Everybody have a great day. I want to keep it under time. Make sure you sign up, alphashark.com/2020 or alphashark.com/2020A.
And looks good. Okay, well, let's get started. Appreciate everybody being here today. So we're going to talk about some really amazing strategies. I call them amazing anyway. So hopefully you'll see after we finish this presentation how these strategies work and the benefits of them. So we're going to talk about butterflies and the long condor. So the following webinar today is purely for educational purposes. Any stocks, options, futures, ETFs mentioned does not constitute advice and should not be construed as a recommendation. So to me, the secret to profits in trading really comes down to price direction, timing, and then managing your risk through options. So what if you had a trading strategy that could turn around your losing trades and maybe even turn them into winners? And what if that same strategy could capitalize on the two main option pricing components, which is time decay and volatility collapse? So more than any other method. So would this be worth your time to learn it? Now, over my 30 years of trading options, I found that the most valuable go-to option strategies that could help literally any trader out there, other than other strategies, is knowing how to use and when to use the butterfly and the long condor option spreads. So the huge advantage that you're going to find from these strategies are their unique option framework that allows you to construct trades that will provide more consistent and greater returns in any type of trading environment. And especially when you are in an environment that's highly volatile or uncertain. But due to the simple dynamic structure, you're going to be able to, learn how to structure these trades pretty quickly. Now, because they're structured to require only a small amount of your hard-earned capital, you're going to find that your trading returns will be greater and your trading stress is going to be a lot less, so kind of a nil. So I find that very much a win-win situation in trading. Now, the butterflies and long condors are very dynamic and can be traded for a variety of different reasons with different goals in mind. So in other words, you're going to learn how to trade butterflies and long condors, and you're going to be covered for both your offense and your defense. So goals and protection. You're going to be covered for making money and also for defending trades. Now, these strategies, they can work no matter what the markets are doing. They can be going up, down, or sideways. They can provide income from stocks that are going nowhere. Really helps to eliminate the stress of having to be perfect on a stock's direction or overall market. Eliminates the time decay expense that you're going to encounter from decaying long options, and really helps to take the unsettling guesswork out of your trading. Now, they can be structured for very, very low cost, as you'll see ahead, and which is very low capital at risk that you're putting up on your trades. And they can offer 10-to-1 or higher returns on your capital at risk. So the other great thing too is that these strategies can be used for any account size, so large or small. The first time I really got into the butterfly was years ago. I had set up an over-the-counter brokerage group for oil trading, and for a company called PVM Oil London, and we were doing a an option trade for a large hedge fund. They were doing a $25,000, not dollar, but 25,000 spread, butterfly spread trade on crude oil. So it was a huge structure. But the takeaway from it was that you can do this with a small account or a large account. So they're perfect for, the smaller retail traders like us. Now, the more other benefits for the butterfly and condors is they're very flexible, as you'll see ahead. And once you learn the fundamental setup, you can then adapt these option strategies for both your goals and your market insight. So they can be structured for kind of a more delta neutral market where the market, you're uncertain to as far as price direction. But the real beauty for me is that they can be used for directional trading. And so you can set these up and structure it to offer you either a bullish or bearish exposure to the market, when you feel pretty comfortable about a stock direction, one way or the other. But the great thing is if you're wrong, the butterfly and the long condor is going to really keep your risk down, helping you manage your risk. And at the same time, you're going to be able to maintain a potential for a large potential returns. So that's really a win-win. Now, let's be real though, these option spreads will not give you that unlimited profit potential as if you're just long calls or puts, but they're going to usually cost you a lot less than when you're buying outrights. And they're going to offer you, as you'll see, amazing risk to reward trade setups. So this means that the butterflies and long condors can significantly increase the probability of your winning trades while also at the same time reducing your risk. And that's really what it's all about. So the longer you're in trading, you're going to be always kind of focused on, keeping your risk tight, maintaining your risk. And that's what I've kind of been obsessed with is that risk portion of your trade. Now, the butterflies and the long condors can be used for hedging when you mess it up. And I know that none of you out there ever mess up a trade, but when you do, this is one strategy that you're going to want to learn how to use. So these can be used as a fast, low-cost way to cover your you-know-what pronto when a position starts to move against you. And I found no other trading strategy that offers this type of unique hedging mechanism. There's no other strategy out there that can hedge a position this quickly. Let me get this slide here. So by constructing a butterfly or a long condor around a strike that is under pressure from another core trade, such as, let's say you had a credit spread on, one second. So let's say you had a credit spread or you had a debit spread and they start to go against you. You can structure this butterfly defense or long condor offense around that original core trade and immediately neutralize and control your risk. And so that's what's fantastic about these strategies, just from the benefit of their hedging potential. Not only making money, but hedging and protecting money. So you can then look to keep the original position open by just implementing either a butterfly or a long condor hedge on that original position. So what this does, this strategy will take advantage of the time decay component, and while you wait, and many times that's really all you need is just that little bit more time for the trade to work out, then you just take your hedge off and just ride it for what it's worth. So, a lot of times you'll get in a trade, it looks like it's going perfectly in your direction, then something stalls out, a headline comes out, and then it stalls out, backs up on you. So this is a great strategy that to quickly neutralize and reduce the risk of your trade, and then just gives you time to hold, wait, see what's going to happen, and then you can make other adjustments to it. But the thing is that you'll see some examples. The hedging component, reducing that risk, is fantastic. So when we look at a butterfly structure, it's very simplistic, really. So this is a call debit spread, okay? So your risk here is $300. So you'd be like long a call, short a call, where my pointer is, and your risk is defined. So that's always good. But I never want to lose the total capital at risk. So one way we could defend this trade, if we wanted to, was add a credit spread to it. So I could sell a call credit spread against it with the same short strike as the call debit spread. In this example, bring in $200 credit. And then I've converted this trade to what we call a butterfly. So this is a balanced butterfly. So then if you look at this structure, what happened was you were long that call here, short the call there, and then we set up another credit spread, selling a call, buying a call. So now we have this butterfly and we have this as our profit zone, and we can make these wide, we can make them narrow. So a lot of different ways that we can use them. There's some other butterflies that I'll show you. So by doing this, we immediately neutralize and reduce our risk in this example down to $100 from 300 to 100, and we still have a good profit zone to make money without having to do anything else. Or we could leg out one direction or the other. So it gives you a lot of flexibility in your trading, a lot of options. All right. Now, the long condor is very similar to the butterfly. The thing about the condor is it separates the short strikes to give you a bigger profit zone here. So this would be like, you could do this with calls or puts. So this would be like a calls debit spread and then a bear call credit spread here. But like the butterfly, you'd have that same short strike there. So you have a tighter window. This gives you a bigger profit zone. So this is another great structure to use as an outright trade setup or for hedging, you know, adding one side to the other. Now, the core concepts that make the butterfly and the long condor work really comes down to the option pricing components. And the most important option factor for profit generation, really on any option strategy, butterflies, condors, or any others, really comes down to understanding the concept of time, theta, and pricing and their effects on the price of your option. So let's take a short review of these kind of core concepts of price. Now, when we look at an option, you know, it's going to have what we call theta, and that's going to be a measurement of time. So theta tells us how much the option's price will go down over time, which is the rate of time decay of that stock's option. So time decay occurs because the extrinsic portion of the value of that option, or the time value of the option, is going to diminish as the expiration draws near, and eventually will go to zero. So we want to be able to take advantage of that. So when we're doing a butterfly or long condor, we're actually selling additional time with this trade structure and also selling additional volatility. So it's a great strategy if you're looking for one to sell time and also sell volatility. So when we look at the two different structures here, here's the kind of a balanced butterfly that I went over just a minute ago, and here's the condor. So we can separate the strikes a little bit further, making it wider. We can make the butterfly wide or narrow to control risk. And there's some other variations that we'll show you as well, but it creates a great systematic kind of trade setup for your directional trading, or more kind of, like I said, delta neutral. Now here's an example for a butterfly. And when we look at a butterfly, it gets its name from the body of the butterfly, where's your short component. So in this example, we're looking at the famous company XYZ, and it's trading at $45. And we're directionally looking for it to move, and we've got a price target that we think it could move to 43. So I like to look and always have a target for any trade setup, so a directional target. So you can use Fibonacci's, you can use moving averages or whatever you use, but have a target. So in this example, I'm targeting a price movement down just to $43, but we can make this to a very, very narrow kind of butterfly, control our risk, keep it really low, but have a great return on that risk. So in this example would be buying the February 44 puts or put and paying $2.38, that's $238, and then selling another 43 put below it and bringing it $1.67, and then selling the 43 put and buying the 42. So this creates a butterfly, you know, a butterfly structure. Terrible hand, hold on, let me erase that. So this creates a butterfly. So you're basically, your body is right here and your wings are here. So that's why it's called a butterfly. All right, so it kind of looks like that. Now, the cost of this trade then is if you take your $2.38, your debit cost there, and the $1.06, your debit cost there, less what you received for the credits that you sold here, the $2.43. So you brought in $167 twice and multiply that times 100 to convert it to an option contract. Then you can see your risk here is only $10 per spread. So if you did one spread, that's $10 risk. If you did 10, that's $100. That's your maximum you could lose without, you know, any other adjustments. And then your profit's going to be, you just take the middle strike here, 43, less the lower strike, 42, less your cost of the trade, and that's going to give you your what I call theoretical profit. So here you can see that theoretical profit would be 90 cents or $90 per option spread. So you do one spread, your risk would be $10 on that spread, but your potential profit would be 90. So you can see that's a fantastic positive ratio. We're risking in this example $1 to potentially make $9. But just think about it. If you don't make 900% return, if let's say you made back your $10, that's 100% return. Let's say you make 20, 30, 40, 50, right? So these can be structured very low risk, or we can make it, bigger risk reward, lower risk reward by the width of the spread and some other kind of adjustments on butterflies. So that's the exciting part about it. You can keep your risk super low, but have a fantastic reward. Now let's take a look at how to choose the best, butterfly or long condor strategy for your trading goals. And one major goal for every trader, in my opinion, should be to select trades based on what's going to provide you the most consistent positive return with low defined risk and not always the greatest return. So you want to stay in the game, and a lot of times it's just a matter of hitting singles, doubles, and occasionally you're going to hit the bigger home run return. But with these types of strategies, you can structure it for those singles and doubles for hedging, and eventually you're going to have the big return as well on top of it. And one of the best ways then to kind of achieve this goal is to be aware of the different option strategies that are out there and available to you, how they work, and then select the one that's going to be best suited for your trading style or the market environment you're trading in, and use those specific strategies. So that's the thing about the option butterfly and condor, is that they offer you some potential for even a small account to keep your risk very controlled, but also provide high return. Now, when we look at the butterfly, I call this kind of the butterfly family. There are a lot of different variations of the butterfly. You've got the long call. You can use calls or puts. You can use what we call a broken wing butterfly or skip strike butterfly. Another one that I like is what we call the unbalanced butterfly, ratio butterfly, and I call that kind of the ninja butterfly. You can use a wide wing butterfly where you have a wider profit zone. You've got the iron butterfly that's really fantastic for trading volatility, selling time. And then a big part of the butterfly is using it to defend other trades that you may have on that you want to neutralize the risk and defend. And then we get into the long condor, which is just very similar to the butterfly, but offers you a bigger profit zone for your trade. Now, let's take a look at a few examples. So we'll look at a couple of butterflies here first. So here's how you can adjust risk and profit by the wingspan of your butterfly. So first off, this will be an example showing you a narrow wing butterfly, how you can make your risk super low. All right, so this was on SPY, and the ETFs index options are fantastic. So, things like SPY, QQQ, the Russell, IWM, and then on the index side of things as well. So SPX, RUT, those are fantastic for these types of structures, or stocks, period. So provides you a lot of different ways, a lot of vehicles to trade with. So in this example, we were looking at SPY, and I like to use Fibonacci for my target level. So we were looking for a target up here to this area here around 273, 274. So this was a 618 retracement level there. So that's a really fantastic profit target to look for, or just a price target, I should say. So this was where it was trading at the time, and we were just looking for a move up here, but we wanted to keep it very, very low risk. And so this was structured as a very narrow winged butterfly. So in this example, this was buying the 272 call. So going long the 272 call, selling the 273 call, and then buying the 274. So selling that again. So that creates the butterfly structure, but you can see this is a very narrow butterfly. It's only $1 wide. See the wings here? Okay, so there's your butterfly. So this is a very narrow butterfly, but what this does for you is you get your risk on this particular example is only $10 per spread. All right, so that's your max at risk. If everything went wrong, you'd only lose $10 per spread. Now, if you got everything right and it went perfectly at expiration to your target of the body, 273, you would make $90 per spread. Now, you'll never make that exactly, but it can come close. So that's the beauty of it. And then this actually 2 days later was up $70 per spread, which on that risk of $10 is a 700% return. So you can see that these things do produce these fantastic returns, and you can do it on very low capital at risk. So that's one thing that is to me, pretty amazing, exciting about these strategies. Now here's the risk profile of that into expiration. All right, so you can see the butterfly structure here, and what you're seeing is how it's going out right here. All right, so it's going out at 273, and this is going into expiration. So that at that point in time, it was up $70 on your risk of 10. All right, so it gives you, you're taking advantage of the time decay component, volatility going to zero, and high return on your risk, which is in this example very low. So you can see it went from a 10-cent debit to an 80-cent debit. So there's your profit of 70. Now, if you see that black area there, that's what's left of the time value component and volatility in this spread. So eventually, if you got right up here to the very, very top, right there at 270, right at the last second of the day at expiration, you wouldn't see any of that black spot, and that would give you that maximum profit. But that's close enough. So you can see how you can, really take advantage of that profit zone. So that's a narrow body butterfly. Now the next one you'll see is kind of widening the wings here. Okay, so directional wider wing butterfly spread. And this is a short trade setup on SPY. It's been hard to short this market, right? So when we are taking shorts on the market, we're usually using a butterfly strategy, because if we're wrong, we're going to keep our at risk, our potential loss, very small. So here's an example of a wider wing butterfly. We were looking for a move down here to the 618 retracement area here around 284 and maybe further. So this was a short trade setup right when it was trading right around 287.50. And then we're looking for a move down to 284 or lower. All right, but wanted to keep our risk super low because these markets have been bouncing around so much. So this was setting up a spread width of $4. Okay, so it was buying the 284 put, selling the 280 put, so $4 wide there, and then selling another 280, buying the 276. So you've got a put debit spread and a bull put credit spread together, creating this $4 wide butterfly. So your profit then, potential profit, is the spread width, $4. Let's look at the cost on this trade, 30 cents or $30 per one spread. All right, so that's your debit. These are done for a debit. Now your potential profit then is 400 less that cost. So theoretically, you could make $370 on this trade if it went out exactly at 280 at expiration. So look at that. That would be 1,100% return, or 11-to-1 positive risk ratio. You risk a dollar to make 11, but if you can get any part of that, it's still a fantastic trade. But the thing is, these trades are possible to get. Somebody says, "Oh, I made 1,000% return." You'd think, BS, but it is true. When you look at this, these actually can be structured for this type of risk reward. Now, 2 days later, it was going out and it was up 316% return, which isn't bad. But we'll take that all day long, right? I would. Now let's take a look at the risk profile. So here is the spread. And so on the 9th, right here, you can see it was way over here. See the butterfly? It's right at a little bit outside, just creeping into the profit zone here. So on that day, on the 9th, this was set up on the 8th. 1 day later, it was at $33 profit per spread, okay, right there. So it went from $30 to 63. So that's 33 on your risk of 30. So that's 106% return. Now look what happens 1 day later, 3 times more return. Okay, so here's just 1 day later on the 10th, it's trading right pretty close to the same price, 282.64, but now you're up $95 per spread, per one spread. And so that's about 3 times more than you were the day before. So what's happening here is you're taking advantage of that additional selling. Okay, you've sold time in this strategy. You're selling time and you're selling volatility. All right, so as you get closer and closer to expiration, all this time value that's left, extrinsic value and any implied volatility, is being stripped out, because at expiration, those two components go to zero. All right, so that's what we're taking advantage of. So that's the beauty of it. You can see 1 day before it was up, 33, and the next day it's up 95, and your return is tripled. Now here's another example. So here, instead of using SPY, you could have used SPX. So just to show you the same example, but using a kind of a larger value contract. So here's the SPX. It was trading at 228.80, and we were looking for a move down. So you could either use SPY or SPX, and looking for that move down here to 2,800, which is roughly would be like equivalent to 280 on a SPY, but it's a bigger contract. So, but anyway, we can still make this a very low risk trade. So this was going long the 2840 put, selling the 2800 put, so a $40 wide spread, which if you're trying to equate that to a SPY, that'd be a $4 wide spread, just like the one I showed you earlier. Okay, so you could do either way. And then buying that 2760 put. So you've got long put debit spread, short bull put credit spread, $4 wide or $40 wide on the SPX. So 4,000 minus 270 is your risk. So the maximum, if you did one contract here and you weren't able to do any adjustments, which we can, you'd lose $270, but your potential profit is $3,730, which on that risk of 270, you can see that's over 1,300% return, or 13 to 1. So there's no other, really trading strategy that offers these kind of returns other than really the butterfly will offer you usually the highest return on your capital. Yeah, less commission, but absolutely. How do you determine which expiration to use, or do you do multiple expirations? Good question. Yeah, so what we will do for which option expiration to use, I look at the expected move of the underlying security. So if that tells us that, if we're looking, what we do is we look for our price target based on our charts in Fibonacci. And if we have a price target, let me just back up a second. That's a great question. So if we first always have a price target, okay? So if you're trading, whatever you're trading, have a price target. So we were trading right here and we were targeting down here to this 2,800 level. Okay, and that's based on Fibonacci, basically. So Fibonacci, or if any, major moving average and price action. You see all the price action there? So that's the target. Now, then the next thing you do is you want to back in, okay, well, if I'm looking for a price target to 2,800, what option series would give me that? So that's where we look at the different option series and we look at the expected move of that series. So if that expected move in this example, we were trading at 2860 and we're looking at an option series that gives us, a move of $60 or more, then that's the series we'll use. And then it comes into, the shortness of time as well. So you want these to be not too long in duration, but shorter in duration to take advantage of the time value component. All right, so here's what happens on this trade. So here's the risk profile, and you can see it's pretty flat, but it's still making good money even with this flat risk profile. Now the max would be at expiration if it's up here. So the risk is 270. Now this on the 13th is trading right here at 2811. Okay, so it was up $465, which is 172% return on your risk of 270. So it'll take that all day long, right? Not bad. That's one spread, okay? So that's a really fantastic risk reward, but we still, the thing that I love about these strategies is the risk component, right? You're not having to risk and put much out there to make some huge returns. Now here's another example, and this is on Amazon, and this is a wide wing butterfly. Now the other thing here is that with these types of option strategies, you can trade the big, high, expensive types of stocks. So you could actually trade the Amazons, the Teslas, the Googles, Apples, whatever, and you can control a large price stock for very little money, and it gets you to play in the game. So here's a wider body butterfly on Amazon. So it was trading right here. It'd come down to the 200 period moving average. We were in this kind of consolidation phase. We were looking for a push back up, and using our price targets of Fibonacci and price action here, we're looking for the first price target right in here to about 1830 level. So we set up a butterfly targeting 1830. So this is a $10 wide butterfly. So it was buying the 1820, call long, selling the 1830, so call debit spread, and then selling another 1830, buying the 1840. So there's your butterfly. So it's $10 wide, which would be $1,000 per one option contract or spread, less the cost of this trade was $80. So see how you're controlling this trade for low capital at risk of 80 cents or $80. So when, Amazon goes up 10 or 15 or 20 or 30, 40 bucks a day, it's hard one to trade if you're just trading the shares, or even trading calls. They're expensive. So here you control this type of trade for very low risk on a directional trade. So potentially this would make you $920 theoretically on your risk of 80. That's over 1,150. That's 1,150% return, or you're risking $1 to make 11.5. So here's the beautiful thing about it. Okay, so let's take a look. So here's the risk profile. This was set up on the 29th, and then on the 6th, excuse me, this was trading right here in the AM in the morning. This was around 10 o'clock in the morning. It was trading right here, okay, at 1836. Okay, we were targeting here 1830. So it had gone past that, but right there at that point in time, it was still in the profit zone. So this was up for one spread, $150 on that risk of $80. So this was 187% return on the 6th. Okay, that was the day for expiration. So it went from 80 to 230. Now look what happens just about 3-4 hours later, same day, but about 4 hours later as we're getting closer to expiration. So this went, it's $150 profit at this point in time, 187% return, but just about 3-4 hours later, look what happens with this trade. Same day. It's now trading here at 1832, about the exact same price, but now see this profit, see that tint, see the purple? This thing has exploded up inside of that. All the time decay, all that extrinsic value has been stripped out in volatility, and now this went from $80 to $695, so $614 profit per spread. So 4 times increase in the spread profit, and 4 times, more return on your capital. So it went from here 187% return, or 150 per spread, to 614 and 769. So pretty amazing. That's why I call it the amazing option strategy. Now here's an example of your long Condor spread. All right, so basically the long Condor is very similar to the butterfly, but we were able to separate and widen out the spread zone, or our profit zone. Question: what happens if you get assigned? Well, usually you're not going to get assigned. There are a lot of things that go with assignment, but if you structure the trades where you're using calls, so for example, if we're looking for an upside target, we're going to use calls, and we're going to be out of the money when we set the spread up. When we're looking for a downside move, we're going to use puts, and we'll be out of the money when we do the setup. So we're not going to be, at a point where we get exercised. And then there are a lot of things to exercise, but usually you'll never get exercised because the extrinsic value is too great, unless you're in a week of a dividend payment. Okay, so if you're going to have a dividend distribution, then all you do, if you're doing a butterfly, don't use calls, use puts, and you won't be exercised. But there are some other factors, but that's a good question. Now here's an example of a call Condor, and also, you could also use SPX or RUT, which are European options. You have no exercise risk. So also we have an alert service, but this was an alert service trade sent out for Facebook to go long and do this with a really low risk trade using what we call a call Condor. So the risk was going to be $75, and the potential profit would be potential profit for 232%. All right, so we were looking for a directional trade up here to, it was trading at 194.76, and we were looking for targets up here towards that 200 area up here. All right, so we did this as a long call Condor to keep our trade risk very low, but to give us a wider profit zone. So in this trading example, we had it was trading at 198.50, and so we structured this as a call Condor. Now you can leg into these because the part of this trade, you can see here, this part of the trade was long call here and short a call. So here's your call debit spread. So long the 195 call, short the 197.5, $2.5 wide spread, cost of $1.05. That's your debit cost. All right, and then the other part of this trade, we put this on at the same time, or you could leg into these, which is a great way to do it, was then selling the bear call credit spread, the 200, 202.5, for 30 cents credit. So that reduced our risk down there to $75 is the total risk. All right, so now at expiration though, it was trading right here at 198.50. All right, so we were right perfectly in the middle of the two spreads. So we had the 195, 197 call debit spread and the 202.5, 200, 202.5. And so it was inside of both the short strikes. So this was a max profit trade. So the debit spread went to a profit of 144 and then kept the credit spread here of 30 because it expired worthless. So that was a max profit, or if it went out in the profit zone, you still make some pretty good money. So you can see here that 105 debit blew to 249 and the 30 cent credit we received went to zero because it expired worthless. So that's the beauty of that. And we can structure a wider window. All right, so just a lot of different ways to utilize these trades, legging into them, legging out, put them on as a spread, etc. Now, if you'd like to learn more on how to, master these, what I call high reward, low risk, which you can see, I'm going to be doing. I've got a great offer for everybody here today. And for one thing, you're going to get my recorded this turned out to be a 7-hour trading course on the butterflies and long condor, all the different variations of the butterflies. All right, so you're going to get this to start with, all recorded, broken down in 30-minute modules or less, the full PowerPoint of the course. But I'm going to be doing an all-new live course in 2 weeks, and you're going to also have access to that if you buy today. All right, so let me give you that link 1 second. So use this link here, and you'll get everything here that I'm showing you for $197, which will give you the recorded on-demand course that I've got, which is a fantastic course. You'll get that, plus you're going to get access to my live course that will be February the 22nd. All right, so you're going to get right away my recorded on-demand course, 7-hour recorded course, 30-minute modules or less, 360-page training manual, step-by-step blueprint course on all the different butterflies and condors. And then you're going to have access to my live course coming up that will start Saturday the 22nd, and it'll be 11 a.m. Eastern to 2, and then follow up Monday the 24th, 6 to 7. You'll have access to that, and then you'll get all the recordings, handouts, and PowerPoint detailed course of that. So the 2 to 1, course now. So you're going to get the 7-hour recorded course, my new live course coming up. You're going to get a follow-up support Q&A, which will also be recorded. You'll get my option trading tutorial. You're going to get my complete option strategy manifesto. These are 15 option strategies that I like to use. You'll get that. You'll get my Greek power tool guide. It's a kind of a handout you put on your desk of all the different Greeks. And you'll get a 30-day trial membership to our trading club. And you'll get all this for the nice low price of $197. So use that link there. And here it is again. And I think you'll be very, very happy with everything you're getting here. The content's fantastic. The strategies are great. And if you're not utilizing it, here's a chance to get involved with these. So part 1 will be a review of the Greeks that are important for these types of strategies, which a big part of that is theta decay, time decay, the impact that it has on the butterfly and long condor, and then volatility, the importance of volatility crush, how that works in your favor on these strategies. So the pricing of the option, the effects of time and volatility are very important for you to understand. So after you come out of this course, you'll understand that, really well. And then part 2 are the core basics. Many traders just don't understand about the butterflies and long condors, and you're missing out on a fantastic way to trade. So then we'll go through the butterfly long condor foundation, which is made up of your vertical option spreads, all right, combining debit spreads and vertical spreads, and then how, why, when to use a long call or put butterfly. These are everything covered in the course. The broken wing butterfly, a ratio butterfly, broken wing ratio butterfly, directional butterflies, iron butterfly, vacation butterfly, long condor. It sounds like Bubba Gump, right, with all the different shrimp dishes. So that's what you get, part 2. And then what are the optimal timeframes? That was a question today. When do you put these on? When do you take them off? What can you use them for? So what vehicles to use, stocks, ETFs, index, futures. You can use it on anything, and we'll go through lots of examples in the course of that. How do you get those structures where you can get a 10 to 1 or higher, which you saw examples of, with as little as $10 at risk? How to profit from option volatility collapse and theta decay using these two structures. And then the best to utilize, when do you utilize that long Condor, which gives you that low risk and the hedging aspect of hedging your directional trades. And then a whole another part of this course too is then how to trade monthly option expiration. So this is actually a lot of fun and gives you kind of a new income stream for 12 times a year. So we do just monthly expiration trades. We call that pinning. And so we use these types of strategies for these monthly expiration trades that will be coming up shortly. So you'll get that. And so then also we'll go through how to set up your price target. Somebody asked about how do you set your targets. So I'll go through price target analysis using unusual option activity and Fibonacci. And then part 2 is a step-by-step checklist of how to put and execute the butterfly and take it off in the long Condor as well. So then execution and management. And then the big part of the course, if you learn nothing else out of this course, hedging. You want to know how to hedge trades, okay? So how to use the butterfly and long Condor to hedge a core position, and then how to use the butterfly and long Condor to hedge vertical debit spreads or credit spreads. And then somebody asked about assignment risk. So you'll get a whole chapter in this course on assignment risk, expiration risk, auto exercise and assignment, and then a trading library of 58-page trading library of past butterfly long Condor trades. So you can go in and kick the tires and see what they look like. I'm a very visual learner, so I teach everything visually with lots of trade examples so you can see how these structures work. So it's a lot of great stuff. Here's the link again. Here's a little feedback on this. Oh, where is that? I can't get to it. Here's the link again, right there. Should be able to click on that. Yeah, power cycle trading. Just when I think I have all about, I can learn about options, in walks Larry with both guns blazing. Amazing, Jim. Excellent class, Larry, as usual. You underpromise, overdeliver. Pam. Wish I'd known about this hedging before I lost so much money doing credit spreads. Geez, Pam. Thanks again for showing so many ways of getting out of trouble. That's it, getting out of trouble. Could have come in handy in the past, and my trading P&L would have been totally different story, Jim. Truly an aha moment, Raj. So just a few happy people from prior course there. So again, you're going to get my access to my new course, all new Butterfly Condor course, coming up Saturday, February 22nd, 11 to 2, or as long as we need, and then Monday, 24th, 6 to 7. Then you'll get also the recording of that live course, broken down in modules, PowerPoint, handouts of the course. You'll get my live follow-up Q&A support of this course, which will also be recorded. You'll get my option trading tutorials. So this is another basic option course, 60-page option guide with videos that covers the foundation of your option trading, the Greeks and how to use them, delta, gamma, theta, all that good stuff. So you'll get that. And then you'll get my 15 option strategy guide, some of my favorite other strategies, which are broken down and shown you the details of the definition of what they are, how they're used. You'll get that, and you'll get my Greek handout. So this is you can, print this off, put on your desktop. What is delta, gamma, theta? So you can have it right at your fingertips there. And then you'll get one trial month membership to our trading club. And if you like to stay, it's $97, or you can do an annual membership for $488. We have a virtual trading room open each day, 9:30 a.m. to 10:30 Eastern. I'm the one in there each and every day, and then back for the close. Give you a daily market trading update videos each night after the close. These are all archived, and we do a live Q&A every week, usually every Tuesday. Those are recorded as well. Trader's Education Vault, and then you get a 60% discount on any course or my trading software on my website, powercycletrading.com. So check that website out, and you'll see all the good stuff we have there. A lot of trading indicators that I've developed. So it's a lot of great stuff, and I really hope that you will sign up, and I'll be looking forward to seeing a bunch of you in the future if you do, because you're going to get access to the live course, you'll get access to our trading room, and I think you'll be very happy with everything you're going to get out of what you're purchasing here today. So thank you very much. Yeah, we also do earnings trades using these strategies. Exactly. Yeah, we do. We have some great earnings strategies that we do. We use the butterflies and we use calendars. We use a lot of calendars for earnings trades as well. So you'll have access to that if you sign up, because we go over and review a lot of those in our trading room. Okay. Yeah, and if you want to then stay on, the trading club is, you'll get 30 days, and you can start this whenever you want. You don't have to start this tomorrow or today. If you want to start it next week or a week or a month from now, just send us an email. We'll start it when you want your free trial. And then if you want to stay on, it's $97 a month, or you can get an annual membership for $488. Well, appreciate everybody being here, and I really enjoyed it, and good luck on your trading, and make sure to join us. And here's the link one more time for you.
Okay, perfect. All right, so I hope everyone's having a great Thursday. It's always, for me, I always love seeing green. Bullish movements, market moving up. And so we're gonna have some fun today. I've been in a couple different events and sessions earlier today, so I've got a real good grasp on what's been happening today. And in 45 minutes, we're gonna get a lot done. And how we're gonna get a lot done is we're gonna leverage technology. You know, at the end of the day, everyone uses technology, and the only difference is what you have and what somebody else has. And so we're going to talk about that, but really I'm going to talk about the concepts of leveraging the trend of the markets paired with simple formulas that you can use to catch breakouts and see movements of the 1%, 2%, 3% in a day type of moves. And so to do that, let me just take a second to introduce myself, and then we'll get the event started. I don't like to talk a lot about myself because it's not about me, but I do want to let you know that I'm an active trader, trading coach, father of two, been in the financial education and trading technology space for well over 12 years now. In my career, directly and indirectly supported hundreds of thousands of global traders. And so I have a unique perspective because I was on the back end supporting individual traders, helping them achieve their goals. And so I really had firsthand experience understanding first the obstacles and challenges traders face, and then being able to systematically improve people's results. And that's the end of the day when it comes to investing, is results. And so what I like to do is focus on simple and repeatable steps to trading. That's the most important step. The best of the best traders in the world have a mechanic. The mechanics of trading that they run through every single time they trade. They don't jump around from place to place and try something new and, oh, let me take a look at this technique, or let me add this new thing to my trading. No, they find what works and they repeat it. And the goal is to repeat your successes and avoid repeating mistakes. And so to understand that process, and I'm going to give you some process today that hopefully you can take advantage of. Now, the end goal in mind of providing simple and repeatable steps to trading is that it empowers you to achieve your own success. I'm not here to be your guru today. What I want to do is provide to you the rules, the steps, and the tools that you can take advantage of this market yourself whenever you want. And that's truly empowering, in my opinion. Now, I'm going to be leveraging technology today. That's the only way we're going to be able to leverage the data, the math formulas to really find the best trading opportunities, is we have to use technology. I mean, it's 2020, we're in the new decade, and technology is a part of our life. Now, I'm going to give you specific rules that you can use on your own manually as well. So don't worry about it. If the wizard's not for you, if you don't like what I'm going to present to you, that's fine. You don't have to make a purchase today to walk away and start applying what I'm going to share with you. I always like to do that. You know, I don't want you to show you something that you can't use. You know, what's the 45 minutes for, right? So I'm going to educate. I'm going to provide some different perspective on trading that can hopefully help you take advantage of the market. Now, these tools are powerful. I'm going to show you trades today, trades that happened in the last 48 hours that are up 30, 40, 50%. One of them's up 100% on the option in just 2 days. I'm going to show you how we got there. Now, the steps in the process that we're going to walk through are as follows. The 4 steps to master the math of trading for powerful and repeatable profits. The first step is we're not just going to trade the trend, we're going to trade the trend breakout. It's one thing to trade in a trend. Sure, we've all heard the saying, oh, the trend is your friend. Some people have added, the trend is your friend until it bends, you know, whatever phrasing you want to use. But what we're going to do at the Wizard is we're going to find the moment of the reversal, the pure breakout. And I'm going to show you on the charts what it looks like. The second step is to follow the surge of trading volume. Follow the surge of trading. Where the money is where the price is moving. It's simple. It's time tested. You can't argue that trading in the trend is important, right? If I'm a buyer, I want the market to go up. If I'm a seller, I've got to look for stocks moving down, right? You can't argue that. Can't argue the fact that money moves the market. Where the money's trading, where the volume is trading, that's where the money is, right? That's where the movement happens. So once we walk through those first two steps, the third step is, okay, how do we get into the market? When do we time our entry? I don't care if I'm going long. I don't care if we're going short. You've got to have a mechanical approach, a repeatable approach to time your entry. So we're going to talk about that. And then we're going to actually be able to let profits run and cut losses. You know, there's a saying, once again, that you should allow your profits to run and you should cut your losses, right? Let profits run, cut your losses. Very common saying. But there's frustration around that for the everyday trader because the concept is good. The theory is perfect. Of course you want to do that. But practically applying it is where the difficulty is had. So we want to try to avoid that. So I'm going to walk you through how we do that. So with that, let's talk about what the end result is, right? When you're able to follow those steps, we're going to be leveraging signal information, right? Because there's a lot of data. We've got over 12,800 stocks. We have 1,600 plus ETFs, and we also provide rules on how to trade the option against these stock signals. So take a look at Boeing. This is Boeing on February 4th at 11:15. Our signal triggered a buy at 317.31. What should stand out to you is the fact that we're not saying buy Boeing whenever you want, wherever you want. It's buy Boeing right in the middle at 317.31. Very specific pricing, so there's no guessing game. But then we also give you different targets, which I'll explain later. But pay attention to this entry, February 4th, 11:15, $317.
Sorry to interrupt you, but we don't see the chart.
Okay, let me see here. Let me load the chart. Do you see the chart now?
Yeah, good.
Okay, you see the chart. Okay, perfect. So the key of this process is specificity, okay, precision. Hedge fund traders don't guess, they have precision. They have certain exact price points where they go to the green light. Green light to them means do something, take an action, take an order, place an order, avoid an order, right? They've got specific, precise places that they've determined in the markets that are key to achieve the maximum success. So we'll handle that and I'll explain that in a second. But watch the date and watch what happened on the chart. So here's the chart. I just pulled this earlier today at 11:45. So on February 14th, you can see the breakout. Remember the step one, trade the trend breakout, right? We were in a downtrend for Boeing. Then at 11:15, February 4th, should be a 4th, right? February 4th, we're not on Valentine's Day. I must have love on my mind, right? So February 14th, look at the breakout and look where that run has occurred. This is only 2 days, literally 2 days. So in that 2-day movement, this is what happens on the trade. So on the stock trade, it's up $19.05 in 2 days. The option, when I built this, which was on 11:45 this morning, right? It's gone up a lot more than that in the last couple hours. But Boeing, the March 20th expiration, 315 call, that strike price, it was up $1,300. So the stock trade was up 6% in 2 days. The options trade is up 118% in 2 days. It's a lot higher than that now in the last 2 hours since I built this. Put this screenshot together for you all. This is a pure example of timing the breakout, following the surge of volume. That's the only way this price moved because of the surge of trading activity. Having precise entries that then apply to the option that will teach you how to place the option, leveraging the stock signal data. And that is the power of aligning all 4 steps to mastering math. So this is what we're going to do today. We're going to do things differently than I normally do in a presentation. I usually go about an hour and 15 minutes in my presentation. So what I'm going to do for this group, because we have 45-minute time slot, is we're going to get right to the most simple concept to follow the flow of the market. The best strategy to increase your conversions, increase your success rate, is to follow the flow of the market and how the market works, right? So you have the market on top, right? The overall market direction. Some people can do it by index. You can do it by the S&P, maybe you want to do it by the NASDAQ and get really focused. It makes no difference. When I'm talking about what is the overall index trend of the stocks I'm looking to trade. But then we have some clustered groupings. Then we have another layer called sectors. Then we have another layer below that called industries. And then we get down to the stocks. So if you've gathered it so far, we're going to focus on the stock side. Sure, we trade ETFs too, but I'm just going to keep it simple, focus just on the stock side for this time slot. So with that, imagine that we get the market direction in alignment. So it's bullish. If you didn't know, it's bullish right now. The sectors, then we're able to find what sectors are most bullish. And then we're going to find, okay, what industries are most bullish? And then let's find the stocks that are also most bullish. What are we doing? We're lining up the top-down investment strategy at its finest. The reason that the top-down investment strategy is not more commonly used on the retail level is because it's virtually impossible for the everyday retail trader like you and I to have a firm understanding of what directions per sector they're in, what the industries are in, and then ultimately what the stock direction is. That's why it's difficult to do. But if you Google top-down investment strategy, you're going to see a lot of information out there. And they're always going to say the difficulty is in managing it. Well, that's no longer the case. And I'm going to show you how. So I'm going to jump over and let's jump into the wizard. And this is the technology platform that we're going to be leveraging today. So the technology platform is the wizard. Okay. This is where we house and run and process literally 3 billion data points on a daily basis. 3 billion rows of data that we process and analyze for the trader. And what we do is we do the heavy lifting. The biggest obstacle that traders face when trading is getting the direction of the symbol, right? So which way is the stock heading? Is it going up? Is it going down? Trend direction is one of the biggest challenges that traders face. How you know you don't get it right is when you buy something and the market goes immediately against you. That means you're on the wrong side of the trade. That is a pure symptom of improper trend identification. So I'm going to start on the top right corner. Everybody should see the wizard. If you can see the wizard, type in wizard in the question section. Type in wizard in the question section if you can see it. Just want to make sure everybody can see the platform in the back. It should say wizard back there. I want to make sure we're all on the same page. It won't make sense if you don't see it. Okay. So it looks like we are good to go. Okay, perfect. Now, first thing we're going to do is let's follow the flow. If we need to find alignment in the overall direction of the market, then we need to know what direction the market's heading. Okay, so let's start there. Very simple step. Now, I got a question coming in. How long has this been around? Since 2002, these algorithms have been in use. 2002, very long time. So let's take a look here. All stocks ranking. Now, we have over 12,800 stocks inside of the wizard platform. 12,000. So tons of opportunities. So what we're going to do though is we're going to filter. We got to chop it down, and we're going to use sectors and industries to do it. But before we do that, we have to understand what the overall market's doing. So you'll see 2 arrows. Now these arrows are important. They're giving us the direction, but they're giving us more than just direction, right? Up arrow is up, down arrow is down. These aren't red light, green lights, okay? These are trend tags. And there's 2 trend tags per symbol. So what we're getting is 2 time frames in one simple snapshot. So you can see we've got some shades of colors that are different here. We have a dark green, bright green. Then we have dark reds, and we have bright reds. So what we do is part of the billions of data that we process is that we've taken the open, high, low, and close prices per symbol, per time frame, and built automatic calculated trend lines. So basically at any given time, you can pull up any symbol of your choice and see what the trend direction is at any given time across all 12,000. All 12,000 plus stocks always have a trend tag to them. So then you know what type of direction you're in, what type of trading you want to get involved in. More so important than that is because they're always tagged, we can find stocks in a particular trend that we want to trade. So if I want to be a buyer, I only want to trade the strongest trends. If I want to be a seller, I only want to trade the weakest trends, right? That's the only way to make money. If I want to be a buyer, the only way to make money goes up. So I'm going to show you that in a moment. But these colors are important. Bright greens are extensions. Bright greens are that classic move up. The market has extended up, right? Very strong, almost parabolic move, making higher highs and extending up. Then you have dark greens. Dark greens is when the market retraces. If it's pulling back, it's still an uptrend, But just as many of you know, the markets don't move in a straight line. They wave, okay? They make patterns, right? So if the market extends up, that's bright green. When the market pulls back, that's a dark green. Then we have the opposite. Then you'll see bright reds are extensions down. They're the weakest. And then dark reds are when the market retraces up. So when we're looking at the all stocks ranking, we actually have a custom index, proprietary index that we've created that we calculate all of the 12,000 stock directions and then calculate, okay, what is the overall trend across all 12,000 stocks? So what we're seeing is we're seeing a bright green daily trend. So that means our daily trend is very bullish. And then we have the dark green is retracing. So that means, imagine we have the weekly that is now retracing down. It's still an uptrend, but it's retracing. And then I have the daily move up. That's the surge of the bullish movement that we're experiencing right now. So let me walk you through how it looks on a chart. So now we know the direction's up, and this type of trend is called a long-term pullback. And you're going to learn about this if the wizard's for you. But we teach you 16 different trend types, and they all give you different types of trades. But we're going to focus on the strongest uptrends and the weakest downtrends. So let's start with the top-down investment strategy. Now we have an understanding of the fact that we're bullish. If you don't know we're bullish, you can just pull up the tickers and we're moving up. So let's now go to the next level. This is a very powerful tool. My traders love this. Okay, what you're seeing now is 16 sectors. You know, the most common sectors are 10 to 11. We've got 16, so we chopped it down even more. And so I'm going to walk you through these time frames, and we're going to see how to catch trades just like Boeing. You saw the Boeing trade? It's now trading at, let me pull up Boeing. I said $1,300 up in 2 days. It's now $1,840 up in profit. $1,840 in 2 days, Boeing. But I'll show you that in a moment. So daily, this is the daily trend by sector. And it's stack ranked. The strongest trend is on top. So of the 16 through yesterday, right? Because it's daily. So just like a chart, it's updated daily. This closed bar was through yesterday. So utilities was the strongest sector, construction was the second strongest, third medical, fourth computer technology, and on and on. But the weakest is transportation and oils and energy on the daily time frame. So these trends bars are representing the color codes that I walked you through already. So the way we train our clients is to read these colors, and your eyes and mind will attach yourself with trend direction. So I'll walk you through it. Bright green, this started on, this is 10 days ago. Bright green means the market extended up. And then we had the dark green move down. So I'll draw it for you. Here's the uptrend. That's the bright green, right? It's extending up. Then the dark green looks like this, dark green. Then you have the bright greens move up. Then you have the dark green. Then you have the bright greens again. That's what this trend type is. That's what these 10 bars are giving us without having to draw a single trend line again. You will never have to draw a trend line on your own again with the wizard. So when we look at this, let's talk about what's happening today, right? Because this is through yesterday. So if I want to get into something today, let's take a look at what's moving. So the top-down investment strategy is, let's find what's happening on the 15-minute time frame. So now we've got the same list of 16, but the order is going to be different because the order is unique to the time frame. So on a 15-minute interval, aerospace is the strongest trending sector in the last 15 minutes. Now what we do is we go down to the next layer group, and let's look at industries. Now every sector has a different number of industries. For example, conglomerates has 1. This sector of aerospace has 3. Aerospace defense equipment, defense, and military. But what do we want to trade, right? What do we want to focus on? If we want to be a buyer, which one of these 3 do we want to look for trades? Type it in the question section. Type in equipment, defense, or military. Which one do you think? If you're following the concepts, right, which one do you think, right? That's right, I got it. AED, it's a good way to put it. Aerospace defense equipment. Why is that the one, Steve? Why is that the one? Because it's on top and it's got the 2 bright greens. So what we're doing, folks, is we're doing this. the strong sector buy strategy. These are buys only when the market, sector, industry, and stock are all confirmed very bullish trends. Now, this is a conservative strategy that waits for confirmation of a strong uptrend before taking any long positions. So if you're conservative and you just want to place trades with the highest winning probability possible, I know it sounds crazy. Everybody wants that, but some people would take a little more risk and get more trades, right? So there is a difference, right? But see, we're looking for the market direction. My mouse just jumped. Got a crazy mouse. Okay, so we've got bright greens. We got very strong trends on the market. We have very bright green trends on the sector. So of course, right, we want to find very strong trends on the industry. And then we're going to look for the stocks. So let's get the stocks. So now we come to view stocks. All right, so there are 5 symbols that meet and are in the industry aerospace defense equipment. So this is what we're looking at. So following the top-down investment strategy, which ones of these are we looking at trades for, right? HEI, TDG, Raytheon. Okay, so let me show you this. Now, I gotta take a second here to explain what all these numbers are. So remember I talked about we tag trends on every single symbol. So these are just 5, we have 12,000. But how we got here is we started with the market, the sector very bullish, the trend, the industry very bullish. Now we're looking at the stocks. So all we want to see in the stocks are the very bullish stocks, which is these 3. I don't want to look at these. I'm looking at the strongest. So what you can do is, we'll teach you this. You can just filter and say, look, only show me the strongest trend. Don't mess around. Don't give me anything else but the strongest. So those are the 3. So our signals, what we do is we give you the precise entry to the penny, and I'll show you why in a second. We give you predetermined profit targets. You see profit targets, and we have target 1, target 2, and then we have stop losses on every single signal. Now, these already left the station. Okay, these are all executed today. You can see February 6th at 12 o'clock, February 6th at 10:15. This one was yesterday, so there was a 3 o'clock. Minus 12, yep, 3 o'clock yesterday, military time, 1500 hours, February 5th. So 1% up, this one's already up 0.5%, this one's up 0.27%. Okay, so we give you all this information. Now let me show you once again what this looks like on a chart. So here's the entry. You remember what we talked about is trading the trend breakout. The algorithms find them for you. The algorithms find it. We're finding volume. We're finding the surge of trading activity. Now our algorithms see the long at 125.03. This is how it works. This is how it works. So we've taken the manual labor side and wanted to focus in on how to drive the best performance. And so what we do is we provide to you the specific entry price. So it's 125.03. You see this target? It says 50%. So we've got 2 money management strategies built into the wizard. You have a conservative and you have an aggressive. See, I've got conservative checked off here. This box is selected. So conservative, the focus of conservative is to lock in profit. Sounds conservative, right? That's what it means, to lock in profit, not just anywhere, but at strategic price points in the market that historically have been hit. And if they haven't been hit before, if we're on new highs, then we use a calculation to forecast the value of that price bounce. So 125.70. And then you see the 50% next to it. The way it works is if I bought 100 shares of HEI at 125.03, and then the market hits my first target at the 50% line, that means I sell 50% of my shares, locking in profit. And then the second target is up here. So if the market hits the second target, then I sell another 25%. The last 25% of my trade is managed by the stop loss. So remember, we said we want to be able to time the entry. Our algorithm times the best entry. Then we want to make sure that we can allow profits to run. That's what the stop loss does. That's the only thing that moves on a signal is the stop loss. And I'll show you some active trades that have been open a little longer so you can see the flow of how these targets work. But these just triggered today. So you're not going to see a big move yet unless it's Boeing or the other 10 stocks that have been rocking and rolling today. But this is how the signals work. And so even looking at TDG, I want you to pay attention to the reversal. See the downtrend for TG. Then we had a buy at 630.17. This is how the algorithm works. You see at 10:15 today, see the high price 630.16 in that little blue box in the top left, $630.16. So our algorithm is all about timing the best entry. So what happens is what we want to see is a continuation of the direction. For that to happen, we need the price to move up. So we put our entries automatically at one tick above the previous bar high. So 630.16 was the high. So you can see the long at 630.17 is one tick above. And so what happened? Next bar, we triggered the trade at 10:30. In that interval, we triggered that entry. But look how early we are into that trend. That's the trend breakout. And the only way we can do this is with algorithms. You see the shades of colors? We're in a bright green. Very strong trend. Everybody can see that that's a strong uptrend, isn't it? So it's very logical and powerful because you don't have to draw on this, and drawing is subjective. Drawing trend lines is subjective, and it's a skill that you must learn. But even with all this, all the experts and gurus, you know, you're going to see differences of opinion. How many of you experienced that, right? This guy says it's going up. This guy says it's going down. This guy says hold. You know, who do you believe, right? It makes it difficult for the everyday trader like you and I. So what we've done at the Wizard for almost 20 years now is provide algorithmic-based, mathematically driven trend identification to help, paired with all of our entries and exits for you. So let's talk about what a new trade looks like, right? Look at Raytheon, rocked. So you see it says closed at 228.35. So what happens is you can see what happened because we give you all the data. So we went long at 226.26 at Raytheon. First target was 228.35, so we hit that target already. So what does that mean? So if you bought shares of Raytheon following this signal, you've profited 50% of your trade already. You closed out for profit. Your second target was at 25%. You hit that target too at 229.24. Your last 25% was stopped out. You're always stopped out at the Wizard because our stop loss is an algorithmic based stop that adjusts and updates for you automatically every signal update. So if it's a 15-minute signal, every 15 minutes we're evaluating the patterns and automatically setting the best stop. And so pay attention. Look, your long is at 226. We got stopped out at 228.35. So yeah, we got stopped out at $2 above our entry. $2 above our entry for Raytheon. So that's 1%. So this number here, this 1%, calculates 50% of your profit taken off here, another 25% taken off of here. So you only 25% was left to grow. But end to end, where it's at right now, it's up 1.15%. Aggressive, there's no profit targets. It's for an aggressive trader that's just going to reap the rewards of the entire trade. So you're only managed by the stop loss, right? That's the difference. But I always look for trades on conservative so I can see what the profit opportunity is. And I always love to see what the risk is. So you get the risk reward ratios, you know what the measured risk is before you get into the trade, and you also know the profit opportunity. That's how powerful it is. So when taking a look at these movements, right, you can see in this group, we're already up and active. But let's try to find some new buys. So what we're going to do is go to another group. That's how simple this is. Top-down investment strategy. There's aerospace. Look at construction pushing up. Construction pushing up, very bullish. So let's do the same thing. Let's look at industries, and let's see which industries are pushing up. Maintenance and service, residential, commercial. So I got a question. Jim's asking, are you trading stocks or options? You trade both. Both. Stock outrights, or you take the signal down to the option. Just like Boeing, as I started the presentation with, same process. Same identical process. So let me show you what that looks like. So let me show you some trades that we were in earlier. So I'm gonna go to conglomerates real quick. Let me show you this. So these are conglomerates on 15-minute signals, conglomerates, right? You can see the trends. So you have GE, UTX, Honeywell, DHR, and 3M. So look at these signals, right? So we had buys on Let's do GE. So here's it. We'll start with GE. So we had a buy on February 4th at 10 o'clock. Entry price at $12.55. Profit target 1 at $12.75. Target 2. So it was up one. It did almost 1% on GE. So the option, the way we use this information is we leverage the entry price. The price is the most important step before we go live. So with GE, the $12.55, we then go to the closest in the money option, which would be $12. Yes, we're going to teach you which delta to use. Make sure you got the right delta. We'll make sure you have the right expiration month. But the simple way is we go 1 month out. So February 4th, you have a 20th expiration in February. We're going to push it out 1 more month. So we're using the March 20th on these trades. So we use that entry. So if it's at $12.55 and the stock hits it, then we deploy the option. The option here that I used was a $12 strike, March 20th expiration. Then you leverage these additional targets to know when to take your profits off the table for the option, when to close out the option. And then you also have a stop loss. You use the same stop loss as you do on the stock. If the stock hits that stop, you then close out your options trade. So GE, this entry on February 4th was 87 cents. The option was trading at 87 cents. It's now trading at $1.16. At $1.16. So you can see it here. GE is down here. You can look it up if you want. You can fact check it if you like. You can see it on February 4th at 10 o'clock, the price was 87 cents a contract, or $87 a contract for GE. Today it's at $1.16 right now. This is live. It's $1.16. So you have $29 on an $87 per contract. You have $29 per contract. So this trade is up 33% since February 4th. Why? Because we're in momentum, right? That's why you're able to get that slingshot effect. You only have 38 cents on the stock, but you have $29 on the option, per option. Typically, you're going to trade more than one contract at this price point. But you can see UTX. Here's UTX. So on February 4th at 9:45 in the morning, right when the market opened, February 4th, the contract price was $5.15 for UTX. It's now at $2.81. The profit is $281 per contract in 2 days. Honeywell flipped to a sell, so the markets move more on these trends. So it flipped directions, right? But that's how you apply, and we'll teach you all the rules of how you apply the stock signal, but options are a derivative of the stock. So why wouldn't we use the stock trading information to leverage in the option? Of course you would, right? And so now you've got very specific pricing to go find it. Now, sectors and industries, very powerful tool. I spend the majority of my time and our clients here, especially my day traders, finding out what's happening. So let's see what's happening now. We just got the latest updated information, and you can see, because it's every 15 minutes we're getting updates. As you can tell, these are changing because I'm on a 15-minute time frame. If I'm a swing trader, then I'm hanging out in the dailies and weeklies, right? I'm not worried about the intraday action. I'm focused on the dailies and weeklies. But take a look now what we're seeing. We're seeing a retracement, aren't we? The dark greens. So we were running bullish for 1, 2, 3, 4, 5 consecutive bars for aerospace, and then we just flipped to a retracement. That's the dark green. Doesn't mean it's going to reverse, but it could. It's testing the trend line. And so you get up-to-date information so you then can apply and drill in and find the opportunities in the market. Now that's one way. We still have some time. Let me show you this other way. Now that's the top-down investment strategy. Very powerful tool. I've never seen a tool that can do it this way, this fast, with this speed. Now, the other way to do this is that you can create your own scans in here, and we give them to you. So for example, let's take a look at this for a second. See, here's 12,000 stocks, 12,839. This is all of them. There's no filters. This is literally every signal. Right now, our signals without a filter on them are 76.5% profitable. They're winning. 76% of our signals right now that are open are winning, which means they're profitable. Of the 12,800, we have 4,974 that are flat. No trade. It's waiting for the entry to be hit, or it's literally flat. So the balance of those are either winning or you're losing. I mean, there's no fluff here, right? You're either winning when you're trading or you're losing when you're trading, right? Same thing here with the wizard. So there's 6,024 winning signals right now. There's 1,841 that are losing. The average profit across the 6,024 winning are 10.64%, and the losing signals are averaging 4.94%. But we're not trading 12,000. Why would we do that, right? What we're going to do now is tell the wizard to give us the stocks that are best set up for breakouts. So watch this. I want to trade the strongest uptrends. I'll show you the weakest in a second, but we're going to go strongest uptrends. I'm going to give you formulas that you can use manually. This field here, where I put 1 million, is setting liquidity. So what I'm saying is I only want to see stocks that average a minimum of 1 million shares per day, a minimum. I mean, you're going to find stocks that have 20 million shares per day, 30 million like Apple in this group, but I don't want to trade the small volume stocks. I want to trade stocks that are at least greater than 1 million. Now this field, remember the surge of trading volume? This is where you do it. I'm going to put 100% here. 100%. What that means is I'm telling the wizard on a daily signal, so these are more swing trades now. On a daily signal, I only want to see stocks in the strongest uptrend that average 1 million shares and traded above their average. Why do I want to see above average? Because that's where the price surge happens. So now watch what happens when I apply those 3 filters. This number is going to go down. This number is going to go up. I'm going to hit show my results. So now we have 127 stocks that are in the strongest uptrend that traded over 1 million shares and have traded over the average. And what that creates is the surge in our direction, which is up. And so we have a 92% winning percentage, 104 winning signals, 9 losing in this group, and 14 are flat. 16.5 average profit, 0.65 average loss for the losers. So if you took these trades and you had the liquidity and the bankroll to do it, in 41 days, you'd be up 15% across all of these signals, 127 of them. Margin trader up 30%. But in here, there's penny stocks. Let me get rid of the penny stocks. Not that they're bad, but some people don't trade penny stocks, either $1.21. So I'll get rid of them. I'm gonna do a minimum price range of $5. So now we're at 92.3 and we have 115 symbols. So if I'm looking for a trade, a swing trade that I can be in for days to weeks, then this is the signal, dailies, okay? So in this group, you can see, and I'm gonna pull up a couple of these, just flash through them. So you can see, once again, I want you to pay attention to the trend and then pay attention to where the algorithms signaled the entry. Look how early we're into GSX. See how early we're into this? And this is a swing trade. Look, November 29th. Look, entry, target 1 hit, target 2 hit. Look at our stop loss, way up here. What's the stop loss doing? It's letting our profits run. The 25% we have left is being managed by the stop. And this will keep moving up and up and up and up until the market loses steam and pulls back. All you do on these signals is once a day, because it's daily, we'll send you an alert and you update your stop loss in your account. That's the management. So 41 days positive and 71 trading days. Just here's another one. Look at the entry. Look at this entry. Target 1 hit, target 2 hit. Look at our stop loss managing our trade. So do we get trend right? So look at Shopify. You're going to see Tesla too, I'm sure. Look at Shopify, how early, target 1, target 2 hit. SDC, entry down here at the reversal, and target 1 hit. Target 2 is not hit yet, but look at our stop loss moving up, locking in profits for us. There's Tesla. Everybody that's talking about Tesla. We were long on Tesla on December 13th, trigger trade December 13th, 2019, when it was $362.75. Tesla is now up over 100%, 55 days on our signal through yesterday. All right, this is yesterday's price, right? 100% on a stock, 55 days. We called it December 13th, right? When it went after this downtrend, we caught the entry all the way up, right? Everybody seeing the signals, the timing, the direction. Are these strong? Why are these all moving like that? Because these are the stocks trading in the direction we want to trade if we're a buyer, and they're surging in the volume. The volume creates the move up. The volume creates the action. That's how the markets move. No one can argue that price action creates the price move. I mean, it's what it is. No price moves, low volume, always. It's mathematically driven. And look at all these entries. And so the key is, anytime you see these, look at all these targets hit. All these targets hit. You can just see the price points. And there's I mean, look at all these. over and over again. I don't know a single company, even on this level, I haven't met them yet, that show all of their trades. Every one of them. It's 12,000 symbols that we have data on at any given time. And so tons of opportunities in here. And what I want you to walk away with at a minimum is the volume. This you have to do manually. You know, you can do this manually, right? If you consistently find yourself in trades that go flat, it's because you're trading stocks that don't have solid enough volume. So the 1 million shares or more, there's plenty of stocks that average over 1 million shares, plenty of opportunities. But the real magic happens here on the volume percent to see the surge. You trend lines on your own, you're gonna have to stick with it, right? I mean, you have to learn that skill if you're gonna do it manually. But you can walk away at a minimum focusing in on finding surges of price. And how you do that is you've got to have, if you're trading 4 or 5 stocks, figure out their average volume. Most broker platforms have a screener of some sort. So you can do 1 million shares and see the stocks, make sure your stocks are in there. And then if you really want to find when they're moving, just compare what the average is versus what they're doing. And if you see the surge tick above, then that's where you're going to see the price move. And as long as you get trend right on your own manually, then you can really increase your results doing it manually. The wizard, as you can see, does it for you automatically, leveraging all the algorithms for us, right? So that's the tool and how fast you can get into the market and start running behind it, right? So that's the difference. And I wanted to make sure that you understood what we did was we filtered the market. You know, when I did that custom scan and I said, only give us the stocks in the strongest uptrend, what that is filtering, right? I chopped down the 12,000 stocks to 127. That's all I did. That's the process, is I chopped it down. And that's what we want to do to get down to a manageable bite-sized piece of the market that is best doing what we want it to do, right? If I want to make money, it's got to go up. So this is what we teach you to do. This is the secret sauce here of mechanically trading with technology to always make sure you're in the right trend, always make sure you have the volume, always make sure you have the surge, and that's when you have the stocks to buy or stocks to sell. Right now we're bullish, so we're looking for buys. We're trading in the direction of the market. But if the market goes bearish, as it was for a week or so, then you're flipping and you're shorting. But having the data, having the access is important. So ride the trend as long as it exists, follow the surge of trading volume, time the best entry, and know precisely how to let your profits run. So to accomplish this, you know, there's people asking what the wizard is, how much is it, how's it cost, you know, what comes with it, and there's a lot. I only have so much time in a presentation such as this, but we have classes every single day that walks you through this. But for those that are interested in the wizard, let me just take the last couple minutes here and I'll walk you through. It's very simple. So we provide the software, the Wizard University, with coaching. And we provide a 30-day unconditional, there's no strings attached, there's no fine print. It's 0 days to 30 days. If we don't meet and exceed your expectations, you submit a ticket, let us know, 100% is your money back. I mean, there's no risk. All we ask is your time in 30 days to figure this out. But you get a special deal today for Investor Expo. We're offering a special quarterly package. We normally only do annual packages, but because of the relationship I have with InvestorExpos, we're going to do a quarterly special for everybody in the room to help you save on the cost versus an annual upfront. So you're going to get all the fees, stocks, ETFs, automated trend finding formulas, the sector and industry trends. This would have paid itself already just on the last 2 days of trading with us. So plenty of opportunity for ROI, plenty of opportunity for data. It comes with 3 sessions a week, live every week, 4.5 hours a week, live Q&A, real support between myself and Kevin Dixon. If you know him, he's great, been in the business for over 30 years, used the wizard for over 11 years. But we have Sunday planning sessions, Tuesday night sessions, Thursday afternoon session. I just got done with that before I came in here. But this is all live in the market except for the 7 o'clock, all setting up the markets and applying all of our strategies. Then the Wizard University, all the training webinars, traders checklist, strategy videos, done for you scans. I mean, there's so much more to talk about once you become a client with us, that you'll have plenty of strategies at your fingertips. So all of this in this program is available to each and every one of you. And I'm going to give you guys a quarterly special just because, like I said, been here with the InvestorExpos multiple times and I'm excited to be back. So it's going to be a 3-month package to save you on the cost. it's typically $199 per month. You can sign up anytime you'd like on thewizard.com. It's $199 a month, and you get all the software, the coaching, and the Wizard University. But we're going to do a special today for the group, and for a quarter, you buy 2, get 1 month free effectively. It's only $398 for the next 90 days. You're going to have complete access to everything I walked you through. If you'd like to just continue billing at that rate, or you can upgrade to an annual, it's up to you. You still have the 30-day guarantee. So typically you'll know within 10 days, 10 days, come to at least 2 classes and you're ready to go with us. It's not that difficult. So to sign up, the easiest way to do it is to go to the website, thewizardtools.com, and our online checkout's there. But I do have some special gifts for you before you go to the website. So don't go yet. Don't go to the website yet. All you have to do first is stick with me, because I'm going to give you a couple extra bonuses. So the next 5 people are going to receive the ultimate reversal strategy. It's valued at $9.95, fantastic tool. This is a strategy on top of, above and beyond the wizard strategies that you're going to have access to. This is a perfect tool for the trading season of the election year. It's 2020, markets have been volatile already. There's nothing more important than having specific strategies to take advantage of the reversal. So I'm going to include that. And then the next 5 are also going to receive access to a special ticket to attend our opening bell trading session and closing bell sessions, which is a complete 80 hours a month of live trading and coaching on top of the wizard support. So tons of live access in the market, setting up trades, evaluating your options trades, all live. There's only 90 minutes a day that we're not with you. We got to eat lunch at the wizard. We still got to eat lunch here, but I'm going to include this as well for the next 5 people. So to sign up, it's simple. Just go to thewizardtools.com to sign up. I've already sent out the link to the chat group, and it's a simple process. And once you hit sign up, you're in. You're going to receive your welcome emails. You're going to be auto directed over to our welcome center, and you'll have access to the wizard. And we have a class literally in 30 minutes. So once you're done with this session with InvestorExpos, you can jump right into a live session with Kevin Dixon. So tons of opportunities for you. Get in the market, take advantage of these moves, just like I showed you. These trades don't take months and months and months. They don't take that long. Why? Because we're finding the surge of trading volume, and we're making sure we're in the right trend for the type of trading we want. That's why we're able to get in. Our average trade length on a daily signal is about 3 weeks. 3 weeks on a daily signal, hitting targets. So it's not a long process if we find the right stock to break out with. Yeah, so thewizardtools.com, thewizardtools.com.
Okay, let's go ahead. All right, let's get started. So once again, I want to thank Anna for hosting the Investor Expos. It's my first time here, so take it easy on me, guys. But I'm super excited to be here today. I'm going to spend the next 45 minutes or so and give you what is considered to be the best option strategy we've ever used. And that was according to my students, Ken and Marilyn Thomas. Ken and Marilyn have been trading with me for about 5 years now. And when I asked them, what makes this the best strategy for them, and Ken replied and told me, he said, Matt, it's because it's simple and it is effective. So I'll be sharing this simple and effective strategy with you today in the next 45 minutes or so. Quick disclaimer here before we begin, this presentation is for education and entertainment only. It is not to be considered investment advice. Make sure you contact your advisors before you make any trades. And of course, never ever trade with capital that you cannot afford to lose. That's the most important point there. And I'm going to start my presentation with something that is unrelated to trading, but I think you find it interesting. I'll only take a couple minutes to go through that. You guys okay with that? All right, cool. So what do these companies I have on the screen here have in common? So you have Amazon, Uber, the National Hockey League, and Wynn even in Las Vegas, right? And I trust that everybody knows, Amazon, of course. So let's start with them. What do they have in common? Let's start with Amazon. So a couple of weeks ago, my wife and I, we wanted to buy Scrabble to play with our son. He's 6. And I think it is a great way for him to learn new words and to learn how to spell, obviously. So I went on Amazon and found this for $50. And with Prime, I can get it same day, right? So here in Toronto, Amazon has a warehouse that is about 30 minutes away from where I live. So it is very convenient. And of course, it is also very dangerous, when you can kind of order on demand and get things same day. Anyhow, I scrolled down a little bit to the bottom of the page, and there what I saw was this section called frequently bought together. And it was showing me the official Scrabble dictionary and also the Uno card game, which these are all classics, right? Below that, if you look at the bottom of the screen there, you can see the games like Risk, Trivial Pursuit, and Cranium. Now, these are all classics that I grew up with, and I would love for my son to learn how to play them. So yes, you guessed correctly, I bought them all. So you see, there has been probably thousands and thousands of people who bought Scrabble from Amazon, and they probably also bought Risk, Trivial Pursuit, and Cranium as well. So by showing me all these additional games when I'm looking at Scrabble, Amazon knows that there's a good probability that I will be buying one or more of those items as well at the same time. And of course I did, I bought them all, right? So the bottom line here is that Amazon is a company that collects and studies customer buying behaviors, and they use this data to offer the right products to the customers at the perfect time. It's kind of like, when you go to a store and they sell you the leather protectant spray when you're buying a pair of shoes, right, at the mall. Only with Amazon, this happens, basically millions of times per day around the world. How about Uber? Let's talk about Uber for a second. Who knows Uber, right? Here's a map of Manhattan in New York. And with the Uber app and data from literally millions of rides, they know exactly where most of the rides are initiated. They know the most popular destination of where people ride to, and they even know how far on average each trip is, right? Imagine having that information. In New York, you probably think that places like Times Square, or Grand Central Station or Wall Street would have the most Uber riders. And you can see on average, each trip out of Times Square is about 3.9 miles, a trip from Grand Central about 4.2 miles, and a trip out of Wall Street about 4.4 miles, right? But these three spots don't even make the top 10. All right, so here are the top 10 Uber pickup spots in Manhattan. You have Penn Station, Columbus Circle, Central Park Southeast Corner, Avenue of America and 23rd, Lexington and 60th, 10th and 43rd, Lexington and 86th, York and 72nd, in Chelsea, and in West Village, right? So if I'm an Uber driver, guess where I'm going to hang out? I'll be near West Village, where on average each trip is 7.9 miles versus only 3.9 miles, for a trip out of Times Square. I'll wait in Chelsea, or even in the northeast side, near York Avenue and 72nd. These rides are much longer and I can make a lot more money, right? Isn't this data useful? So the bottom line is Uber and their drivers, they use real-time data to find customers and to get to them quickly, right? And that gives them an edge over the traditional competition. Let's just change gear a little bit and talk about hockey. I'm a huge fan, and my son plays a sport, so we talk a lot about hockey at home. Anyhow, this is Frederick Anderson, and he's the goalie for the Toronto Maple Leafs here in my hometown. Now, data accumulated over the years show that 14% of the goals that he let in were high blocker side, 21% high glove side, and a whopping 36% went through his 5-hole. Right? So of course, teams playing against the Leafs, they will be studying these numbers before the game, and guess where the players are going to shoot? That's right, between his legs. Now compare that to Tuukka Rask of the Boston Bruins, right? Only 18% of his goals allowed went through his legs, 24% on the glove side and 28% on the high blocker side. So if I'm playing against Boston and Tuukka is the net, I should high blocker side for sure, right? And in the National Hockey League, and actually all pro sports for that matter, teams and players use hard data to get an edge over their opponents. And having this kind of highly accurate information gives the teams an edge, right? And that could well mean the difference between the winning and losing the game. So on a somewhat related note to hockey, This is a photo of me taken recently at the Las Vegas Wynn Resort. That's my go-to hotel, and we stayed there when we're in town. Anyway, behind me there is the sportsbook area. Now, I don't gamble too often, but sometimes I do like to bet on some of my favorite teams. So I've been watching the Buffalo Bills since the late 80s, since I was in high school, right? And just because it's close to Toronto, probably. We are all Buffalo Bills fans back in the good old Jim Kelly days. So when they were playing the Texans during the wild card week, I decided to put some money down. Now, the Texans were favored by 2.5 points. And being the football expert that I am, I thought the Bills were in pretty good form at the time, and they should be winning by a field goal, not the underdog, right? So I put $100 down, and if the Bills can pull it off, I win $100. The over/under that the Vegas bookies were estimating was 43.5 points total. So sure enough, the Texans won. They won by 3 points, right? Just covering the spread, and my $100 was gone just like that, and the bookies had the over/under very close. The game had 41 points scored total, and they were estimating 43.5. They're so accurate, you just can't make this stuff up, right? And obviously, sports betting is a big business in Vegas, and the bookies, they put a lot of effort, and energy behind creating these spread and money lines, and that's why they're so damn accurate. And if you look at football, these are just some of the variables that are being inputted in their data machine, and that's how they're able to generate tens of thousands of simulations to ensure that they will win money every single time. And the bottom line is, they use data mining. They've been using this for decades, right? They've been creating their sports books through data mining, for 40, 50 years. And this is how they're able to consistently dominate, the uninformed players, like me, right? Isn't that true? Now, circling back to the original questions, what do these companies have in common, right? And the answer is they all use a lot of data to be accurate and to be fast, right? Whether it be to sell a new line of product on Amazon, or to add more Uber cars, or where to shoot the puck, and even how to create a point spread, for football games, right? And it's not just these 4 companies that are successful using data. Pretty much all great companies are doing the same thing today. Now, you might be wondering, and have the questions in your head, Matt, what does this all have to do with trading, right? Well, it is clear that businesses, organizations, and even sports teams are successful because they analyze data and use it to their advantage. Heck, even my 6-year-old kid's hockey team uses data and perform their training and study their opponents, right? And trading is no different. Trading is no different. Yet in today's data-driven world, over 92% of retail traders, they're still shooting from the hip. They don't use any hard data to get an edge to make their trading decisions whatsoever. Instead, they make decisions from their gut, or they're getting tips from watching TV. There's no proper research at all, right? Now imagine if we can also, as traders, if we can also use data mining to find out exactly when stocks are most likely to move up and when they are most likely to move down. Would that help our trading? So here's what we're going to be doing here today. I'm going to share with you a simple data mining technique to find exactly when stocks are most likely to move up or down and how much they're likely to move up or down. I'll then show you how I 17x my return trading this information with options instead of just buying or selling the stocks. I'll show you a case study of that. So let's dive right in. First, let's talk about how we can perform data mining to find high probability stock moves. Now, I need you to have just a piece of paper. Doesn't have to be a huge piece, just a small piece of paper and a pen so you can write some stuff down, all right? Now, what you see here is the end result of the data mining exercise for the stock Adobe, symbol ADBE. We're going to reverse engineer the process from here to see how we can find this information. Let me explain. Between January 31st and April 1st, this stock has been bullish 22 of the past 25 years. This means if you bought the stock on Jan 31 and sold them on April 1st, you would have made money 22 of the past 25 years. That's about 88% accuracy. Now, not only that, your average return during this period would have been 14.47% each year. That's 14% in about 2 months, right? realize that most stocks don't even move up that much in 14% in a year. And if you use options to trade this information, your return improves to 100% or higher, depending on how you structure your trade. We'll talk about that a little later when we look at a real one, okay? Now, here is the detailed data for each of the past 25 years for Adobe. Now, this information, this data is free, and you can download this information from websites like Yahoo Finance or even your trading platform if that's what you use. I will show you where to find this information in a few minutes. Again, that is 88% win rate just simply by following a schedule. The average return is 14.47%, and of course, much higher if you were to use options, and we'll take a look at that later. I call these profit schedules. All right, are you writing this down? Because this profit schedule for Adobe just started last week. All right, I used the same presentation when I was presenting a presentation last Friday, and that was exactly when the Adobe schedule started. All right, so write this down. This is relevant today. All right, you know that repeat every year option on your phone? You can use this next year, the year after, and the year after that. So have it ready. And that's why I'm telling you to write this down so you can remind yourself every year, okay, it's January, Adobe's coming up. Let's see where the stock is if there's an opportunity there, right? So we're not doing anything fancy here at all. We're just following the data, right? And if you're a more visual person like I am, here are the charts that correspond to this schedule starting in 1995. Now, the arrow simply represents from Jan 31st to April 1st. You can see here, 1995 was a winner, 96 was a small loser, 97 was a winner, 98 was a winner, winner in 99, another big win in 2000. And you can see how the stock just took off to the upside on Jan 31st all the way through to April 1st. A loser in 2001, another win in 2002, about a 15% move there. Big win in 2003. 04 was a small win. Huge winner in 2005 with some really aggressive buying. A loser in 2006. 07 was a winner. 08 was a winner as well. 2009 was a winner. 2010 was a winner. 11 was a winner. Obvious here in 2012 was a winner. Winner in 2013. And you notice that how this profit schedule covered the bulk of the uptrend for Adobe from pretty much a new year all the way through to Easter. A winner again in 2014, winner in 2015. Even in a choppy market like 2016, it was a winner. Very clear here, 2017 was a big winner. More aggressive buying in 2018. And in 2019, same there, it was a winner as well. Adobe was very bullish during that period of time between January and April. Now, I want to bring your attention to the volume graph at the bottom, okay? If you guys were here for the presentation prior to me with Matthew, you know, he mentioned a lot about volume, right? So let's talk about volume here. The white line to the left of the green arrow there at the bottom is the average daily volume for Adobe prior to Jan 31, which is the start of the profit schedule, right? After Jan 31, you can see that the average volume went up by about 120,000 shares per day, okay? It's not that noticeable when you look at the graph, right? But, you know, it's pretty stealth. And of course, you know, this extra demand of 120,000 shares is what's driving the stock up. So who do you think is doing this? Right? Not me, right? I mean, you know, I don't buy 120,000 shares of Adobe. Of course, it's the big money, right? It's not a coincidence that stocks like Adobe, you know, a long-term blue chip company, moves up precisely during the same time each year, right? Ultimately, demand is what drives the prices. And the big money are the ones driving up the price each year right here for Adobe. So that's 22 out of 25 years, about an 88% win rate during precisely the same period of time. So make sure you write this one down for Adobe. It's one of the best ones, and I use it every year. And you can use it again next year as well, okay? So how did I figure this out? So most of you have met me in the past, either in person or at one of my events or online at a webinar. But there are a few of you here, I'm sure, who I haven't met. So I'm gonna keep this intro very, very short, okay? So I live in Toronto, as I was saying earlier, with my wife and my son. I've been trading for about 18 years. I swing trade futures, currencies, and options for the most part. To give you an idea, most of my trades last anywhere from a few days to a few months, okay? So as a chartered market technician, or CMT, my primary trading method is technical analysis, okay? And the reason why I prefer technicals is because it allows me to find repetitive pattern that I can quantify into hard rules. So basically, every time I see the same pattern, I just execute a trade based on my rule-based strategy. So think along the line of, if I see A, then I do B. If I see C, then I do D. So that kind of an analogy there, okay? And when I see a stock like Adobe that moves up 22 of the past 25 years, it is obviously a repetitive pattern. So that's how I started, using data mining and find the exact dates of when these stocks are most likely to move up or down. It's a pattern that I saw happening over and over again with hundreds of stock. Now, the reason why I love this approach is because it works, and just as importantly, because it is rule-based, there's no hesitation, there's no emotions involved, there's no analysis paralysis. I just follow the rules. Now, I keep my trading as simple as possible, and over the years, I've taught over 50,000 traders how to do the same. And being a rule-based guy, I don't need to be sitting in front of my screen all day long. With technology today, I simply wait for a setup notification and I put on the trade. I love to travel and spend time with my family. I'm a pretty simple guy. And the way I trade allows me to just get on with my life and other interests very easily. Now, enough about me. Let's keep moving and look at more examples. So how do we find these? 1 second, it's lost. There we go. So now that you know what a profit schedule is, okay, let me show you where to find them. Where do you find this data? So first, you want to go to yahoo.com. Like I said, it's free. You can get this information, okay? Then at the top of the page, you want to type in a stock symbol that you're most interested in, right? So I like a lot of blue chip stocks because there's a lot of volume there, and yes, you know how important volume is. And in this case, let's put in Procter & Gamble, one of my favorite stocks to trade. Then click on the tab that says historical data, and you can see you can input the date range that you want to get the data for. So in this case, you want to put in anywhere from 1999 all the way through 2019. So that's a good 20 years of data that I want to look at. And then you want to click on the done button. And what happens is when you do that, a spreadsheet will be downloaded automatically on your computer, right? So when you open it in Excel, what you will see is a few columns of numbers. And basically, all you need to keep is the first column, which is the date, and the second last column, which is the adjusted close, okay? Now, I want the adjusted close because it includes the adjustments for all stock splits and reverse splits if they were available, all right? And you want to delete all the other columns because we don't need them. We don't want too much data. All we need is just the date and the adjusted closing price. Then all you need to do is to run a pivot, all right? And then what you would get is you get the year at the top and you get the date at the bottom and the price in the middle, okay? Now this part is a bit more tedious, but as you comb through the data, you will see that there are chunks of times, where a particular stock is either very bullish or very bearish on a seasonal basis, okay? So in this case, as I will show you in a second, there's a clear tendency for P&G to move up from July to October. Now, I must warn you that this is a simple way to do this, but a tedious way to do this, okay? And it would be much faster to do it on an automated script like I do, but I want to make sure you learn how to do this manually. Like I'm teaching my kid right now how to do multiplication, right? I'm not going to give him a calculator. He's going to use his hands and write out the answers, right? So I want you to have a full understanding of the logic behind this approach before you automate this process. Okay, so this is the end result of this data mining exercise. Basically, from July 29th through October the 8th, the stock has been bullish 19 of the past 21 years. Okay, so that's about 90% of the time. Anything over 80%, I would say, is pretty good to trade with. Now, what's most impressive is the magnitude of the move. Now, on average, this boring blue chip stock actually moves up about 4.83% during this time. Now, I want you to write down this 4.83% number. We're going to be talking about this shortly. This is a good size move because It is a slow moving stock, and we can easily turn a 4% move into a 100% return trade using options. And that's the ultimate goal of where we're getting to today, okay? So for those of you who want to look at the data, here it is. And you can see that we can pinpoint the exact date, from late July to early October pretty much. And, we are using hard data to get these kind of setups. It removes the emotions, right? There's no guesswork involved. The numbers are the numbers. They are on the screen, right? And this is the kind of edge that we need in today's trading. Now, I promised you earlier that I'll show you how to use options to trade this profit schedule. So let's do that right now. Look at the red square, and I want to show you how we put on an options trade on July 29th with my students, okay? Let's do this step by step. Now, here is the options chain for Procter & Gamble on July 29th, 2019. The exact dates of when this bullish profit schedule began, okay? Now, the stock was trading right near 115 to be 114.73 to the exact, as you can see being pointed at by the red arrow. And we used a bull call spread to trade this move, okay? So what is a bull call spread? What we did was we bought the 115 call for $3.73 each, and we sold the 120 calls at $1.51 each. Okay, we did 40 spreads here. You can do one spread if you want when you get first started, it's no problem. And here you can see that with the red ovals and the orange box, how many we bought and the prices we bought and the strike prices that we bought. Okay, now at the top right corner, you can see that we use the October 18th expiration, which is about 84 days out from July 29th. Okay, 84 days out. Now remember, the schedule runs from July 29th through October the 8th. So the October 18th expiration works really well with it. Okay, so basically all you're looking for is an expiration that is pretty close to the end of the schedule itself. All right, very straightforward there. Now here you can see on the risk graph, if you look at the red box at the top, the total cost for this trade is $8,880 for 40 spreads. Okay. Now, if you're just starting out or if you're new to options, you should do one spread for $222. All right. How do we get 222? Notice in the green box there that we bought the 115 calls for $3.73, and we sold the 120 call for $1.51 or $151, right? So the net between the two is 222. So that's how we got the number 222 there. Note that 222 is also the maximum risk for this trade. Okay, then as you get more comfortable, you can scale up to 2, 4, 8 contracts and so forth. Now in the smaller red box there, you can see that the maximum possible return is about 125%. If you trade 40 spreads, that equates to 11,120. If you trade one spread, your maximum profit is $278 from 222. Okay. The yellow arrow is where the stock is right now, and the green arrow represents the up move that I'm expecting the stock to make. Note that the horizontal line, the red horizontal line, is my target at $120, which is the short strike. Now, this is very important. Remember, I asked you to write this number down, 4.83%. That's the number that P&G normally moves up on average during this time. I need the stock to move up 4.6% during this period to achieve my 125% return. The stock on average moves up 4.83%. So those two numbers need to jive, right? You can't, have the stock work so hard that it's nearly impossible for the stock to move that much, that magnitude during this period of time. So those two numbers, when you're constructing the trade, it needs to make sense. Okay, so that's the really important point there you want to remember. Now let's fast forward to October the 8th, 2019, which was the end of the profit schedule. The stock is now trading at 122.84. It actually went up about 7.1% since July 29th. Now, very simply put, if I bought the stock shares with $8,800, that would have been about 77 shares, and I would have made about $624 of profit if I bought the stock, which is pretty good actually. Now, using the bull call spread with $8,800 in capital, the position made $9,400 or 105% ROI on $8,800, right? So this is the power of leveraging with options, and that's about 14 times difference compared to buying the stock. Okay, so now let's look at another one. Make sure you write this one down. July 29th to October the 8th, PNG bullish. Okay, it's very simple. That's all you need to write down. Now let's take a look at another profit schedule. You must be wondering by now, does this work for stocks that goes down consistently during a period? Let's take a look. Here's one. Write this down. Parker Hannifin, symbol PH, April 29th through June 25th. Okay, very simple. That's all you need to write down. Bearish, 10 of the past 11 years, which is about 91% accurate. On average, the stock drops about 6.86% during this 52-day period, which is from April 29th through June 25th. Now, that's 10 out of the past 11 years, and the stock has dropped during this time in the market that has been super bullish. Think about that. The market has been ridiculously bullish for the past 10 years. So when I see a schedule that goes counter trend, right, I pay attention. So clearly, the big money, like I was saying before, they have a habit of selling the stock during this period from April 29th through about June 25th, over the past 11 years at the very least, right? So while a lot of amateur traders, they just keep buying stocks during this time because the market is bullish, you know, if you're a trader and you have this information with you, you wouldn't touch it. You wouldn't go long. In fact, if you can, you would find a way to short the stock. And if you can't short the stock, you would use options to trade this in a bearish manner. Okay, and this is what we're going to look at as well. So we go to April 29th. This is the options chain for PH. If you look at the stock there on the red arrow, it was trading at about 183.47. We're looking for the stock to go down, right? In this case, we bought the 185 put at $7.85 each, and we did 35 of them, and we shorted and created the spread, the 180 puts at $5.55 each. Right, and we shorted 35. Those numbers need to be the same to create a typical vertical spread. Okay. Notice at the top right, we used the June 21st expiration, about 53 days from the start of this trade. And that matches quite well with the June 25th, which is the end of this typical profit schedule for Parker Hannifin. Fast forward to the risk graph. You can see in the larger red box that the cost of this trade for 35 spread is about $8,050. Okay, again, if you're starting out, please do one spread for $230. That's manageable risk. You cannot lose more than that. Then as you get more comfortable, you can then move on to 2 spreads, 4 spreads, 8, 16, etc., etc. Okay, in the smaller box, you can see that the maximum possible return is about 117% or $9,450. If you do one spread, right, your maximum profit can be $270 from a $230 capital that you can use on this one. Okay, now the yellow arrow is where the stock was at the time, and the green arrow represents the down move that I am expecting for the stock. Okay, so note that the horizontal line, the red horizontal line, is my target at 180, which is a 1.9% move, a 1.9% down move from the current price. That's right, a 1.9% move is all it takes for us to be able to get 117% return on the spread. Remember from the previous slide that the stock normally goes down 6.86% during this period. All we need is a 1.9% move, right? So the larger the disparity with those numbers, the better it is in the right way, obviously. Okay, so again, we want to make sure that the stock doesn't need to work too hard to double our money. That's your rule of thumb. You want to make sure the stock doesn't need to work too hard to double your money. If that doesn't work, skip the trade. You can't construct one that's good, skip it. Okay. Now let's fast forward to June 21st. The stock actually, believe it or not, dropped to 171, which is about 6.7%, right? Right near the average move that the stock usually make to the downside during the past 11 years, right? So if I shorted the stock with $8,000, that would have been about 43 shares, and I would have made about $535 if I did this put spread that I just showed you, right? My students made $9,450. That is 17 times what you could have done with the stock itself, and that's only if you can borrow the share to short. You see the advantage of combining these profit schedules with options, right? You now know something that 99% of the amateur traders don't. I just gave you 3 high probability stock moves for Adobe, for P&G, and for PH, Parker Hannifin here. So all with win rates of about 90% or so. All right, you want to see a couple more? Yeah, let's do that. Now, before I explain to you how you can trade these profit schedules with me every week, I want to point out that the concept of this seasonality is not new, right? It's not an original idea. Many professional traders know this happens, but they don't use the exact dates like I do, right? Which allows us to leverage the schedule by using options and make 14x or 17x like I just showed you. Okay, and with that said, here is a recap of the 5 steps that you need to follow in order to find this profit schedule information from Yahoo. Okay, so just jot these down quickly, but I want you to pay attention to what I have to say. Okay. Now, step number 1, you want to download all the free information, the free data from your favorite stocks from Yahoo. Okay, I show you the process of how to do that a little earlier. Now, step number 2, once you have that, you want to pivot the years and find bullish and bearish periods for those different stocks. Okay, so just do that a few times. You don't have to do it all the time. Just do it for a few. Okay, and then you want to basically be able to write a script in Excel or create your own methodology to do that. But again, once you've done one, you can use that information over and over again every single year. Okay, now step number 3, this is the most important point, so pay attention. Okay, so here are the option strategy that you want to use to trade these profit schedules. Number 1, if the situation is bullish, but implied volatility is low, you can just buy a long call, or you can use bull call spread like I showed you earlier. Okay, if it is bullish and IV is high, you can consider using credit spread, using a put credit spread to do this. Okay, you don't have to. The debit spread works really well. That's my go-to, my preference. But the credit spread sometimes can be advantageous as well in high IV situations. Okay, either way, if it was bearish and low IV, use the long put or the bearish put spread. In a bearish situation where the IV is high, you can use a call credit spread possibly, if it makes sense when we construct the trade. Step number 4, you want to pick an expiration date that corresponds exactly to the profit schedule. It doesn't matter if they're weekly options or monthly options. That's as long as they're liquid and have a decently tight bid-ask spread, that's the most important thing. Now, step number 5, you want to enter and exit the trade based on the profit schedule dates that I just showed you how to do. All right. Now, if you feel that this trading approach works for you, if this makes sense to you, all right, and you want to skip steps 1 to 4 and go straight to number 5 and make money, I want to help you do that. I'm going to give you the best profit schedules every week. I'm going to give you the best options trades to go with these profit schedules. So all you need to do is to spend 5 minutes on the weekend to put these trades on. If you want to trade with me and would like my help doing this together, I invite you to join my Profit Scheduler Club for Options. So let me tell you quickly what this club is all about. Now, it's based on 2 things, really. Okay, number 1, every week, it's very simple. I do all the data analysis to give you the exact profit schedules for the stocks that are most likely to move up or down, as I showed you earlier. Number 2, I give you the best options trades that goes with it. Okay, they all target at least 100% ROI or higher in a safe manner. As you saw earlier, we either do straight options or most of the time we do spreads. There's no naked options involved. Okay, so we do this in a very safe, well-defined risk manner. When you log into the members area, you'll see the most recent profit schedule published, as well as all the archives. They're all in there for you, so you can download all of them, save them and use it again the next year. Okay, so here's one from July 14th for Take-Two Interactive Software, symbol TTWO. When you click on that, okay, when you log in, you click on that, you see the profit schedule and how I am setting up the trade exactly. Okay, you get all the critical data analysis and everything you need to know on this downloadable document. If you zoom in at the top, write this down. Okay, write this down. I sent this up back in July to my students, and you can use it again this coming July. You see that in the past 10 years, Take-Two has traded up 9 of these 10 years between July 15th and September 18th. July 15th, September 18th, a 65-day period. So make sure you write this down so you can use it again this coming July, which is actually not too far away from now. For this particular trade, a bull call debit spread was the best strategy to trade the Take-Two profit schedule. And here you can see that the information I provide include the average up move for this stock, which was 12% a year, the expiration date that you should pick, the strike prices, the cost of the trade, the exact potential ROI, and the exact entry date as well. Moving below, you will see all the exit scenarios and my comments about this setup and any other nuances that you will need to know, okay, to make this trade successful. Things like how to deal with earnings when it comes about, how to deal with dividends are all considered, okay? So great preparation is a must if you want to be successful, all right, that's for sure. And everything here is to help you get in and out of the trade very easily. At the bottom here, last but not least, is the risk graph of the trade, like you've seen before, so you can track the P&L of this profit schedule. Now, this profit schedule was completed back in September, and my members made 104%, okay, with this spread. Very simple. Here's a bearish one that's coming right up in a couple months, okay? Lows, symbol LOW. Click on it, and you will see the complete schedule for the trade, like I've shown you before. At the top, you see that I sent this out back in April to my members, and you can use it again this coming April. And basically, Lowe's has traded down 11 of the past 13 years between April 23rd and June 22nd, a 2-month period. So remember to write this one down so you can use it in a couple months, okay? Again, a down move, a consistent down move for a market that has been up over the past decade, okay? So that tells me something right there. Now, I used a bear put debit spread for this trade, and here you can see that the stock on average moves down about 5%. You see the expiration date that we picked, the strike price, the cost of the trade, the potential maximum return, and of course the entry date as well is all there for you. Again, you see my exit comments and all the nuances that you need to manage your risk. You know exactly when to get in and out. Okay, I spent a lot of time on my preparation, so I know ahead of time exactly when to take profit and exit a trade. Okay, I don't want to be a deer in headlight, where I freezes, when I need to take action. Okay, so preparation is key. Again, the stock you can see there, it was near the top with the bearish schedule. The stock traded down. My members took full advantage of that, and they made 132% ROI on this trade alone. Okay, let's do one more. Make sure to write this down. Now, here's a very recent one that we literally just completed a couple of weeks ago. It was a bullish profit schedule for Altria, symbol MO. Now, everybody was beating down on Altria fundamentally, right? You hear in the news, oh no, the vapes, all that stuff is, it's not good. They're getting shut down. This traditional industry, is no longer viable, right? But yet, when you download this document, you will see that in the past 19 years, this stock has gone up between November 19th and January 15th, 17 of those 19 years. So that's about 89% win rate, okay? Now, for this trade, we use a bull call spread, and you can see that the strike prices that we use, the cost of the trade, which is only $100 per spread, actually, for this one, with a maximum return of 152%. You see the exact entry date for this. Down there, you see the exit rules, okay, that I put down, all those different scenarios. Okay, so here's a risk graph again, really important point. And all my members made 152% return on this particular trade for MO. The whole idea is just to keep things simple. You see a schedule, technically the stock look good. You can create an options trade out of it. That makes sense, right? And the way we go. Now, before I talk about how you can join the Profit Scheduler Club, I need to make some things very clear so that we can set the right expectations, okay? Now, this is not for those who are looking to get rich quick. This will not do that. This is very much a data-driven strategy designed to take advantage of exactly when these stocks are most likely to move up or down. You can't rush this, right? It is what it is, okay? So it is to help you get in and out with the big money, all right? It's not crypto. This is not something that you can just guess, and ride a wave. Right? This is something that is set in stone every single year, all right? This is not for those who cannot follow rules. or those who like to trade on the whim, right? These schedules are based on hard data, like I showed you earlier, and they are set. These dates are, you got to follow them. So for those of you who don't have the discipline to do this, like what I just showed you, this is definitely not for you. Okay, this is not for day traders. These trades last anywhere, from a month or so to 2 months, right? These are swing trades. These are not day trades. So if you're a trader who likes to trade during the day, right, then this is not for you. All right. Now this is not for exclusive paper traders. Now, if you don't plan on doing any real trades, this is not for you. This is an implementation program. So I do expect you to be ready to go to execute the trades. And finally, most importantly, this is not for whiners. Nobody likes whiners, and I sure don't want one in my community. Okay, so my members are very disciplined and they're very accountable. If you're the type who blames a losing trade on things like the market, the Fed, Trump, a bad day, bad weather outside, you being tired, or any other excuses, this is not for you. Okay, but if you're not any of these types, and the potential of making 100% return on each week with me doing all the hard work makes sense to you, then this Profit Scheduler Club is a good fit for you. And here are some of the benefits that you can expect by joining the club. First, you will have access to an exclusive members area with my top 2 to 3 picks each week. Now, that's at least 104 profit schedules a year. I think we did about 130 last year. And the great thing about this approach is that we can use this again and again every year without reinventing the wheel. You can download all the profit schedules in the archives and you can use them again. You get the high probability options trades to go with them, targeting 100% return, just like what I showed you a little earlier. Now, markets can turn on a dime. Remember how much I stressed the importance of those bearish schedules, even in this bullish market? So you will get both bullish and bearish profit schedules to stay hedged all the time and to keep your portfolio well balanced, okay? So expect to be always trading both sides of the markets with me. You get the option strategies that are perfect for small accounts. You can see as little as $100 per trade sometimes. And of course, you can scale up, right? And I have newbies in the program who are trading 1 contract to more advanced traders who are doing as much as 50 contracts, okay? Now, with each profit schedule, you will get all the details like you saw on those documents, okay? The strike prices, the expiration date, the target price for the stock, the risk, and the different scenarios all laid out of how to exit the trade. The idea is to keep it simple for you. And because this approach is very straightforward, okay, you can trade it basically with all your options brokers in the US, internationally, here in Canada, it's not a problem. And the ultimate goal for me, at least, is to save me time, right? From using these repetitive patterns so we can all build wealth and enjoy life at the same time, okay? Now, we talked about who should not be joining the club. So let's talk about who this would work for, okay? So, basically people with busy careers, if you still work full time and you find time today, on a Thursday afternoon to watch this presentation, right? But you don't have time to do this all the time, right? This is great for you if you don't want the learning curve and you don't want to make the mistakes. Okay? It's great for new traders. I have some of those. And these trades are structured for you every week. You can learn along the way. It's done for you. So you don't have to worry about it until you are up to speed and you can do this yourself. It's great for busy traders who want to build up their retirement account. Again, we don't do anything naked here, no naked options. Everything is risk defined, so you know what you're dealing with every single trade that you put on, okay? I also have a lot of intermediate and advanced traders who've been trading with me for a long time. So a lot of those guys, they're looking for a high probability standalone strategy. And some of them use it as a standalone one, like I said earlier. Some of them use it to combine with their existing strategy. So if there's a software that you're using, or if there's another strategy that you're using, you can combine these two to do it. Or you can even use them as a bullish and bearish indicator. And finally, a lot of my guys are part-time traders who have limited time to find the trade. So in this case, very simply put, I do all the tedious work for you. Look for the trades, give you all the explanation. So all you have to do is just to put the trades on. Okay. The retail price to join the Profit Scheduler Club over at my website, certustrading.com, is $29.97 per year. It is a substantial investment. There's no doubt about that. However, you can recoup this investment really easily, as you can see with a few trades, depending on how large your account is. And you get new setups every week for the whole year, which I would have to imagine you would think that even at this price, it is pretty fair. but I'm not going to stop there. Okay, so for today's Investor Expos attendees who are committed to learning and improving your trading, I want to include the following bonuses to support your success. Okay, bonus number one, you get my annual profit scheduler publication. Now, this annual publication contains 52 of my bullish profit schedules. Okay, so that's one for each week starting in January through December. You can trade them straight up with stock shares, or you can use options as well. You can use a spread, you can use a straight calls, and so forth. This is normally reserved for my one-on-one mentoring students only, but I think you'll benefit from this. So I want to include this with your membership for this presentation today. Oh, one more thing here, you will get also the newest edition of the annual profit scheduler and subsequent updates as well. So remember, this is in addition to the 2 to 3 profit schedule options trades that I will send you each and every single week. All right. So bonus number 2, you will get unlimited VIP support. You will have questions along the way, I can guarantee you that. So when you join the profit schedule club for options, you will get a special email address. And what I want you to do is when you have questions, send your questions there. And my staff will make sure that any trading questions get to me personally. I'm the one to answer all the trading questions. They will help you with all the administrative stuff, but they will flag any options related questions and get them to me as quickly as possible. Okay, so that's really important. And bonus number 3, you also get my live monthly coaching calls. I do want to make sure that you succeed. Make sure that you're doing the right things. You're not, basically screwing things up with the trades. There are a lot of questions to options, obviously, on these coaching calls. Okay, my student asks me questions. We deep dive into recent trades, and basically, I'm sharing the same insights and options tips that I do with my mentoring program that costs 30 grand a year. Okay, so my students have told me in the past that this coaching alone is worth the investment because you do get me every single time. This is how I personally help you get to that next level that you've always wanted. Okay, so here's a recap of what you get with the program. When you join today, you will get immediate access to those picks coming this. Usually, I can send them out on Saturday or on Sundays, so you will be getting them in a couple of days to start trading with me. You will also get the options trades, obviously, along with those profit schedules. You will get the bullish and bearish setups, which is to me the most important thing. A lot of people break their account, when they're too long on the bullish market, and when the market turns, all right, then everything goes downhill from there. So you will always be trading both sides with me. Okay, I want to make sure you understand that. You get the complete archive, so you can use these schedules over and over again the year after. My goal is to get you to be able to do this on your own. Okay, you join me, and then in the future you're independent. And that's what my mentor did for me. I spent 2 years with my mentor back in the early 2000s, and his goal was to get me independent, and he did a good job of that, obviously. So I really appreciate that. And I want to do the same for you. Okay, and you will get the exact entry and exit details with the strike prices and expiration dates and so forth on these trades. And the 3 bonuses, of course, the annual profit scheduler, my VIP support, and also my favorites, bonus number 3, which is the live monthly online coaching and complete archive. Okay, and of course, as I was saying earlier, the total value of what I'm presenting to you here is $2,997. Even at this price, it is worth the investment. Look at how you can easily scale up from 1 contract, to even 20 contracts and so forth, and build up your capital that way. However, I also understand that a lot of you here at the Investor Expos are newer to options and don't have a big trading account just yet. So I'm going to help you out here. And here is what I'm going to do for you in this presentation today. If you're willing to invest in yourself, I am always willing to invest in you. That's what my mentor did for me, and I want to do the same for you. It's very simple. I've had this rule over the past 8 years since I've become a mentor for myself. You're not going to pay $2,997 a year for this presentation. I have created 10 gold memberships, and these 10 new gold members will only pay $997 for a full year of membership. I want to make this affordable for 10 of you who are ready to get started today. If you do the math, that's about 66% of the regular price. This means you will get started and start trading with me this coming weekend, and you will be trading with me for the entire year. All right. So the link for you to sign up right now is certustraining.com/expo10, expo10. And in addition to this full year gold membership that you can take advantage of right now, I want to make this journey a completely safe one for you without any risk whatsoever. Your satisfaction is guaranteed. You joining the club comes with a 30-day money-back guarantee, which means you have absolutely nothing to risk at all when you join today. If you don't think, like I said at the beginning of the presentation, that this is the simplest and most effective way for you to build wealth trading options, or if there's any reason why you don't like this at all, just email me. Just email me at support@certus.trading, and I will buy back your membership and you will get a full refund. It's really as simple as that. So there's really literally no way that you can lose here with me today. All you have to do right now is go to certustrading.com/expo10 to register. And when you do that, a fully secured checkout form will pop up in a new window. Simply fill out that form and hit submit, and your username and password will be emailed to you within minutes, and you can start checking out the archives and trading with me on Saturday and Sunday. Okay, if you change your mind for any reason at any point over the next 30 days, you have my guarantee to back you up. So Anna here, I've finished my presentation. I hope it was helpful and I was able to give all of you some new trading ideas, a new way to be disciplined, a new way to use seasonality, a new way to use options. And, you know, to be honest, whether you decide to trade with me or not today, always be improving yourself and your trading. Take action now and start scheduling your success today. And for those of you joining the club, I will see you at our coaching call next week. All right. Thanks, Anna. Back to you.
Thanks, Matt. It was a great presentation, and I really
Thank you.
like your offer codes. It's very important if I like it or not. I have a chance to try it first, and I think 30 days is enough to find out if it's for you or not.
Absolutely. And I know we're out of time here. I took a bit more time than I should, but if you have any questions, if anybody has any questions, please email me at support@certustrading.com. And just mention that you were on the Expo webinar today, and my assistant will make sure that they get your questions to me. Okay?